Declare open this hearing of the Senate Select Committee on the impact of climate risk on insurance premiums and availability for its inquiry into the impact of climate risk on insurance. I begin by acknowledging the sovereign owners of the lands we gathered on, the Jagera people and the Turrbal people, and pay my respects to their elders past and present, and I extend that respect to any Aboriginal and Torres Strait Islander people here with us today. We will conduct today's hearing in person and via teleconference. And I have Deputy Chair Senator Sheldon here with us, as well as committee members Senator Andrew McLaughlin and Senator Dave Sharma in the room with us today. These are public proceedings being audio streamed live with open captions via the Parliament's website, and a Hansard transcript is being made. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as contempt. It is also contempt to give false or misleading evidence. Witnesses also have a right to request to be heard in camera. The Senate has resolved that an officer of a department of the Commonwealth or of a state shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asked for explanations of policies or factual questions about when and how policies were adopted. If a witness objects to answering a question, they should state the ground upon which the objection is made, and the committee will determine whether it will insist on an answer, having regard to the ground which is claimed. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. I remind committee members and witnesses who are appearing via video conference and who are not speaking to please mute their microphones. Could I please remind those contributing that you cannot divulge confidential, personal, or identifying information when you speak? If you wish to supplement your evidence with written information, please forward it to the Secretariat after this hearing. And could I please ask everyone to ensure that they have switched off or turned their mobile phones to silent. And I now welcome Ms. Alison Smith, Ms. Lucy Green, and Ms. Crystal Baker from the Local Government Association of Queensland. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, will you please state your full name and the capacity in which you all appear today, one by one? Thank you.
Good morning. My name is Crystal Baker. I'm the Manager of Strategic Policy at the LGAQ.
Good morning. I'm Alison Smith. I'm the CEO at the LGAQ.
Good morning, I'm Lucy Green. I'm the Lead Intergovernmental Relations at the LGAQ.
Thank you. And now I invite you to make an opening statement before I invite members of the committee to ask questions.
Thank you, Chair, and thank you, Committee. Indeed, thank you very much for having the LGAQ come and speak with you this morning on a topic that is of increasing concern right across Queensland communities and therefore to their councils. I'd firstly like to acknowledge the traditional owners of the land on which we gather here in Brisbane and pay my respects to elders past and present. My name is Alison Smith. I'm the CEO of the LGAQ, and you've just been introduced to Crystal Baker and Lucy Green here with me today. The LGAQ is the peak body for local governments right across Queensland. We have 77 council members, and we've been in operation since 1896, providing support, guidance and advocacy for councils. We're really pleased to have this opportunity today to speak to you and take questions on relevant points that we raise, because it's really important, this work that you're undertaking. Queensland communities are simply being hijacked by insurance bills that are putting further pressure on them at a time of a cost of living crisis. And our Queensland Council members are united in their calls for the state and federal government to step in to help to make insurance coverage fairer, to help to make it be more affordable and more available for homeowners statewide. Our state in Australia is the most disaster prone. It's the most financially impacted by natural disasters. And when you have a look at the statistics, if we look at just that period of 2022 to 2023, we had some significant disaster events right across Queensland. Some 72 of the 77 local government areas were impacted. It resulted in 15 DRFA activations. And then when you look at just February and March 2022 here in southeast Queensland, the flood event here resulted in about $1.3 billion of claims and about $630 million of uninsured losses. So we thank the federal government for establishing a range of initiatives. One of them is the $10 billion reinsurance pool that was established several years ago. There's a couple of issues with that yet, and that is that the deadline for insurers to sign up has not yet passed, and we are yet to see any benefits of that scheme in terms of how it could help to drive down insurance premiums. When you have a look at some of the ACCC statistics for the 2022 to 2023 period here in Queensland, in North Queensland, policy holders were hit by a 7% increase in the average price for home and contents insurance, an 8% increase in average strata premiums, and quite simply the highest median premium for strata properties insured at over $4 million. That's now $33,000 a year, and that's more than 3 times the average price in the rest of Australia. So these increases are unsustainable, but they're happening everywhere. It's in SEQ, regional, remote, rural and coastal communities. And I think what's even more concerning is that this is happening despite investment that is happening into mitigation, investment into mitigation measures such as flood levies. So how is that fair? In our submission, we've made 10 recommendations, and those 10 recommendations sit across 4 themes. So I'd like to just very quickly outline the 4 themes. The first one is having access to affordable and appropriate insurance cover for residents. The insurance industry needs to take into account the investment that is being made into mitigation measures like levies, and then be transparent about how it calculates premiums. We would like, the second theme is about ongoing and increased state and federal government investment in that resilience building, in that mitigation measures into betterment. And local governments are doing what they can. But remember that when you look at how much tax is raised across the country, local governments get 3 cents in every dollar. 80 cents goes to the federal government and the rest to the state. So councils therefore need to see federal and state governments bearing the brunt of this investment, but councils will continue to do what they can. And we know that climate weather, climate-related forecasts are set to become more regular and more severe. So really we can't control that, but we can control what's put into mitigation and having effective betterment. The third theme is around having a review to ensure that current investments that are being made are effectively driving down insurance premiums. So we think that there's opportunity therefore for a holistic re-evaluation of the $10 billion cyclone reinvestment pool. We would support a widening of the criteria so that it's not just limited to cyclone-related flood events in that first 48-hour period. And then the fourth theme is around seeking federal and state government support for a contemporary and fit-for-purpose minimum insurance coverage requirement for local government. It's set by the state government. Here in Queensland, it is a lot lower than it is in other states such as South Australia. So in closing, I'd like to thank you for the opportunity to speak today on this really, really significant issue for Queensland communities and their councils. We look forward to any questions. Thank you.
Thank you very much, Ms. Smith. Over to you, Senator Sheldon.
Thanks, Chair, and thank you again for joining us. And you know, you're outspoken advocacy on behalf of local government in Queensland, but also there's some very important initiatives that during the hearing yesterday and on other occasions and other hearings on other matters of a similar nature that we're talking about today. I just want to go first of all to one of the initiatives of the Hazards Insurance Partnership is undertaking to work across government and industry to compile a national picture of insurance affordability and coverage which of course we hope will be finished in the very near future. Do you think this question of data and a nationwide data, obviously having specificity of regions and states, would be helpful in better understanding coverage and availability and affordability? And do you think that lack of data at the moment is also driving some lack of transparency about what's happening with insurance premiums?
I thank the Deputy Chair for the question. I might start and then hand to Crystal for some further comments. But in our submission, we did recommend that the Hazards Insurance Partnership is continued and has a focus on providing opportunities for more additional targeted engagement with local government sector to be able to unlock some of that data, make it more transparent. In our submission, we're very clear on the fact that we don't see that there is transparency currently afforded to how premiums are managed in light of what is known, what is happening in those communities, and the information around initiatives that councils, state governments and federal governments are putting in place. If I could hand to Crystal Baker, thanks.
Thank you.
Thank you very much for the question. To add to what Alison Smith just mentioned, collaboration through the Hazards Insurance Partnership, we think with local government would be a big benefit. Local governments across Queensland do invest heavily in localised data, and that is seen through examples like the QCoast 2100 program in Queensland, which is a program that is a partnership between the LGAQ and the state government, investing in really detailed coastal hazard adaptation work and detailed coastal hazard mapping. So we really see an opportunity for local level data to be able to help inform insurers, to help to inform, I guess, those risk settings. Local governments in Queensland are required to plan for all natural hazard risks, and so we do have a lot of rich data at a local level that we think could, through collaboration with the Hazard Insurance Partnership and the federal government and the state, really help to make a more informed decision around and more transparency around how insurance premiums are set. Thank you.
So we haven't got time for many questions, unfortunately, but there's lots I want to ask, and I'm sure my colleagues will ask many of them as well anyway. So I'll put some on notice if we miss out. But I just want to go to my final question for a handover. Your submission also points out that councils have invested significantly in mitigation and resilience measures, but this hasn't always stopped insurers from raising premiums, even in areas where there haven't actually been floods, but also where mitigation has been put in place in areas where floods have previously occurred, and also the inconsistency of the premium increases or decreases. It seems to be more magic than transparency. Is that your experience? And if it is, are you able to draw on some examples that might be of use to the committee?
I thank the Deputy Chair for the question. That certainly is our experience across Queensland, where there doesn't seem to be much of a rhyme or reason around what initiatives have been put in place, and therefore how that might affect the premium rate. I know later today you'll be hearing from the Mayor of Merway, and his community is a classic example of this a lack of transparency and lack of understanding why premiums should be as high as they are. In his community, for example, a levee was built many years ago, and that has prevented further inundations to that area of Charleville. However, despite that, their premiums have increased for households and businesses by up to 500%. If you go further southwest to the community of Boulogne, they've got a similar circumstance where they have put work in place to construct flood levies, and yet they've got premium spikes of well over 100% as well. So it's not fair, and it's not taking into account what's happening on the ground, which then raises questions of, is this postcode discrimination? Is this drawing circles on a map but not understanding what is actually happening in those communities? And for our councils, what really concerns them is the fact that it means that their residents are having to choose choose whether to insure because they're juggling the cost of living pressures and they can't necessarily keep up with premiums. So it leaves a situation where you have some people who are simply unable to afford insurance. And of course, it's often the case that those who are at the highest risk are the ones who are left without having the ability.
I not only want the examples, and thank you for those examples about where there's appears to be discriminatory or lack of transparent approach, but also there's been some occasions where there's been some improvements. So that this question of inconsistency, the program for the Queensland Household Resilience Program and that pilot program up in Bundaberg, as I understand, if I'm correct, there's been a 9% reduction in premiums. And then in Roma, that does have some of the mitigation we just talked about, where premiums dropped. So we're getting premiums dropping somewhere in some circumstances, but in other places it doesn't drop. So there just appears to be this lack of consistency about, when we're investing in resilience building, and councils and governments are using limited funds that they have. It's not being recognised, and sometimes it is. It seems
Yes. Yeah.
madness.
I thank you for the comments. It is hard to to rationalise, and that's part of the challenge that we put to this inquiry in your deliberation. So thank you for raising that point. You did touch on the Resilient Homes Fund. I did want to say we absolutely welcome and thank the federal and state governments for their contribution to this. $741 million in Queensland. It has seen more than 6,000 homeowners register for the program, and it's providing an incredibly useful and valuable exercise of retrofitting, raising or buying back houses. Our members would love to see that increased at a statewide level, so that when you have future occasions of communities that are in need of such a measure, that it could be in place for them as well.
Thank you.
Thank you
Thanks,
so
Chair.
much. Senator Sharma or Senator McLaughlin? Who's asking?
You've gone. I've got a couple of questions.
You go first.
When you, in your response to Senator Sheldon, you talk about the experience of councils. How are you capturing that data to be able to form that view? Are you collating a data suite that may assist us?
Thank the Senator for the question. In preparing LGAQ's submission, we sought feedback from across Queensland councils. So we know that our councils are hearing directly from their residents and the tangible examples that they're providing. We also hear from our elected members their own personal situations as well. So this is direct on the ground feedback that we're getting, I guess, to inform that. And what we really do hope to see is that transparency around how they are being set, so that we can understand where mitigation measures are actually making a difference and start to get that, rich data.
Are your constituent councils, for example, collecting data on 10 people who have premium issues in this shire, or do we have data at that level from your constituent councils?
I thank the member for the question. Further to what Crystal has said, we rely on our council members to give us information about what is happening in their communities. It also, what they are experiencing also underscores their motions that they bring every year. And for multiple years now, we have had this issue brought to our annual conference and supported by an overwhelming majority of our councils across Queensland. So we know that it's an issue, and there have been certain circumstances that have been highlighted that we've put into our submission for you, but also in previous submissions. We've actually had many years of talking about this issue, and each time we'll bring forward certain examples that our councils give to us.
Just want to, you okay? Just one more. I just move on to another issue. Has your association formed a view, or has a view, on how decisions should be made for future development, having regard to the impacts of climate change and having regard to past experience with perhaps for decisions from your constituent councils on where to develop new housing estates?
I thank the member for the question. It's certainly the case that there are some areas where existing houses have been built in areas that have later been identified as being at risk, for example, flood-prone areas, and that information has come after the fact, and that's an area where initiatives like the Resilient Housing Fund has been really helpful to address. It would be fair to say that our members find the system that they're working in somewhat frustrating, because they have been putting forward a view to help them prohibit development on their planning schemes. We've yet to have traction on this, to have the planning scheme be able to do that. The frustration that our councils have is that they can refuse development applications, and they can refuse them on the basis that it's in a flood-prone area. But that can't stop the developer then appealing that and ultimately taking it to the Planning and Environment Court.
Thank you.
Yeah.
Chair.
Yes, please.
Thank you, Chair. Thank you for your appearance and your evidence today. So you represent, is it 77 LGAs across Queensland?
Yes.
So is there I presume there's some divergence between LGAs in terms of what they're seeing in affordability and availability of insurance. Can you just give me a sense of which LGAs are seeing this most acutely?
Well, I might refer to Crystal to answer this. We've actually just had a forum this week of our coastal leaders, so coastal councils coming together. So you would have the latest from them from this week.
Yeah, thank you very much for the question. In terms of our Coastal Leaders event this week, insurance was an extremely topical discussion, as was climate change and disaster resilience. For us as a sector, seeing reports like the ACCC identifying, these insurance premiums in the whole of the North Queensland, I guess reinforces the fact that it's far and wide in terms of the insurance premium spread. The motions process that Alison mentioned before that we have at our annual conference at our AGM is the opportunity where all councils back in the calls related to motions, and once they're passed as resolutions, so it becomes a whole of sector issue. So yeah, we would say that every council is experiencing it, albeit slightly differently across their communities, but it's certainly something our whole of sector has called for.
But are there sort of like highlighted councils where you'd say the problem is particularly acute, or LGAs? Is it Brisbane City? Is it Merway? Is it somewhere in far north Queensland? I mean, where do anecdotally, if not empirically, do you have a sense of that?
Yes, thank you for the follow-up question. We do. Some of the examples are in our submission, like Merway with the 500%, like Boulogne with the 100%. There are other submissions that we know will be appearing, members that will be appearing before your committee today, also mentioning, in the likes of North Queensland, $900,000 for an 11-storey apartment complex for strata insurance, which has gone up by $400,000 in 1 year in terms of a quote. So yes, we have examples spread across the state, and I guess that's reflective of the statewide nature of the issue.
Yeah. Okay.
Yeah.
And did you? I mean, I presume something similar happened after the 2011 Brisbane floods, which was about a $2 billion insurable event. Did you see? I'm not sure if you were working in the sector at the time then, but did you see similar issues after the 2011 Brisbane floods? And if so, were they addressed, or have those premium increases reflecting higher risk been built in since that time?
I thank the member for the question. I wasn't actually in the sector then, so I'm not able to answer that. Probably
None of your colleagues were?
Yes. No.
No, okay.
Sorry.
That's all right. And then just the last question. I noticed one of your recommendations, and I think it appears quite often in your resolutions that you pass at your annual meeting, about recommendation 1, that state and federal governments urgently implement measures to alleviate the financial burdens. Do you have a particular mechanism in mind that your members advocate for the alleviation of financial burdens? I mean, is it a sort of annual payment to all homeowners, or is it a tax cut, or something to do with the taxes that fall on insurance premiums? Did you have a prescription in mind there?
I thank the member for the question. I think it's fair to say there's probably no one-size-fits-all solution. I think a one-off payment, won't actually get to the heart of the issue. When we see the combination effect of things like the reinsurance pool, like the Resilient Homes Fund, like the Hazards Insurance Partnership, like the Disaster Ready Fund and the work that NEMA's doing, as well as the work that our state government's investing in terms of understanding risk and mapping. All of those things combined are really what's going to, I think, shift the dial in this space.
If I could add, please, through the chair to that answer from Crystal, thank you. It is difficult because every community is unique, but I guess, in terms of the premium setting, we would appeal to this committee in your deliberations, looking for ways to make it more transparent and also to be able to ensure that there is not postcode discrimination or other issues that are unfairly impacting communities. And I think in terms of further financial assistance, it is about continuing those initiatives such as the Resilient Homes Fund. And at a local council level, it's also incredibly important that financial assistance grants to councils are increased and restored back to at least 1% indexed annually like they used to be, because that is yet another mechanism that enables untied funding for councils to spend in areas where it determines the priorities for its communities are. So it's those sorts of levers that we would be asking you to consider. Thank you.
Okay. Can I just ask one more question? Just this question of postcode discrimination. I just wanted to understand, and make sure I understand the term correctly. I mean, I presume it's accepted that certain postcodes are at higher risk of natural disasters and high-cost insurable events, so you don't expect every postcode to pay the same insurance premium. Are you talking about houses with different risk profiles within a postcode that are not priced differently in accordance with their risk profile? Is that what you mean by postcode discrimination?
Yeah, I thank the member for the question. Well, it's essentially about looking at an area and deeming that to be high risk, but not necessarily taking into account what mitigations have happened and the fact that those mitigations have actually ensured that there hasn't been inundation, that those high risks that were known that led to that reputation for an area have actually been effectively mitigated.
Okay, thank you.
Thank you.
Thank you, Chair.
Thank you, Senator Sharma. I might go to your recommendation 3, which is about the cyclone reinsurance pool, which was established by the federal government some years ago. And you've called for a review of that. I understand that not all insurers have joined the pool, but you also have, asked for the expansion of the pool to include flood risk. So could you kind of talk a bit to that? What are you seeking from the review? Is it the effectiveness of the program?
I thank the Chair for the question. Again, our members were delighted when the fund, the reinsurance pool was created, because it was something that they had advocated strongly for. We think that it is very narrow in its criteria, because ultimately it is set around cyclone-related flood in the first 48 hours once a cyclone is declared. In Queensland, it doesn't take long to have a look at what actually happens in a cyclone, and we have regular events post-cyclones that can lead to flooding or further storm, rain depressions that lead to extensive flooding. We think all of those should be included within the remit of the reinsurance pool. We would also suggest, for it to be truly effective, that it takes into account other natural disasters such as tsunami, earthquake, etc.
Thank you for that. And we've spoken a bit about how insurance companies are deciding on premiums, and it's a bit unfair. And you've, quoted examples of towns having flood levies, and still their premiums are rising. Do you think there's an element of price gouging from insurance companies here? Because I have read reports of that. I'm just wondering if you have a view.
Thank you for the question. Certainly the view that our councils have expressed to us is the inequity, because it is, the way that premiums are being set, there is no transparency. So then that leads to, a sentiment of, well, what is happening? Why are some communities being hijacked by what appears to be unfair prices? Crystal?
And thank you. I'll just add to that. I think going back to the question from the Deputy Chair, the ability to embed localised data into the decision making would really help to kind of even that out and make sure that it is, I guess, informed with that best available information.
I mean, people raised yesterday when we were in Ballina in the Northern Rivers about, no one knows how insurance companies use flood mapping, for instance, whether they, to raise premiums, whether they actually look at the flood mapping, and that should be really transparent as well. Is that something that you would support?
Absolutely.
Okay.
Thank you.
We also heard yesterday, and this was really distressing to hear from community kind of witnesses who said that it was more, the experience with the insurance companies after the floods had happened was more distressing than actually the event, the disaster itself. I'm just wondering if you have heard similar things, from people who've experienced floods here, and they were asking for more accountability from insurance companies because it's been 2.5 years. Some people still have got nothing back. Could you kind of relate to that in this area as well?
I thank the Chair for the question because when you think about it, our local councils are the level of government closest to the people. At that grassroots level, they are seeing, experience, and sometimes living it themselves as residents of their communities. You do have a couple of our councils from Queensland speaking to the committee today. I would encourage you to ask that question. It's not something that's been elevated to us necessarily, but they would see it from their residents.
Okay, that's fair. Your submission warns of the ripple effects of rising premiums, including on the housing crisis. Could you explain, elaborate that a little bit more, and what are these ripple effects? I'm presuming cost of living in general is also interlinked with rising premiums.
I thank the member for the question. Absolutely, increasing insurance premiums really does, I guess, impact on cost of living and affordability. Something that we don't have here in Queensland is around statutory seller disclosure laws in this state. So unlike the systems that operate in New South Wales and Victoria, where you do need to disclose natural hazard risks, it's a buyer beware system here in Queensland. And our councils have been very strong in calling for enabling disclosure so that people can make informed decisions, which will ultimately allow them to understand perhaps the risk and therefore what potentially the insurance premium might be. One of the ripple effects, going to your question as well, that we are concerned about and our member councils are, is I'll use the example of the strata buildings and strata insurance, and that example that we have known about and will be discussed more today, no doubt, around the $900,000 insurance premium for an 11-storey apartment complex. When something like that is happening, we actually are concerned that there may be an unintended consequence and preventing downsizing, for example. When people are actually wanting to downsize their properties into units, and we know that the housing crisis is real, and we know that for many locations, units and people moving into smaller properties is something that will help with housing affordability, but also something that people do look to do as they age. If insurance premiums are that costly in a unit complex, that really is a disincentive for those people to downsize property and to actually move into there. So that's just one example, I guess, of that ripple effect.
Yeah. Thank you for that. Obviously, councils themselves have insurance as well, they're insurance customers. And I'm just wondering, have your members also found it hard to insure their assets? We heard yesterday from the mayor of, I think it was Lismore City Council, that they were finding it really hard. They can't get affordable insurance for some of their assets. Is that something that you can relate to here in Queensland?
Yeah, thank the Chair for the question. I'm not sure how it is in other states, but certainly in Queensland, the LGAQ is a trustee of a local government mutual scheme which provides risk coverage for councils. So we do that as a way of providing a level of risk coverage that takes the spikes and takes the volatility out of the private sector. So as a mutual, we have 30 years of data because that's how long we've been running. that level of data gives the reinsurers confidence, and it gives them the ability to look at the trends. It's a bit different in the private sector if you're looking for individual insurance premiums as a council.
Of course. And how have, climate-driven disasters impacted local government budgets and overall operations? Just a very big picture, because I know they have. I used to be a very proud local government officer for many years, and I do really understand the incredible work that local councils do in their communities. So just wondering, over the last decade, for instance, how have climate-driven disasters impacted council operations and budgets?
I thank the Chair for the question. As I said at the beginning, Queensland is Australia's most disaster-prone state, so our councils feel the effects when these impacts hit their communities. We have incredibly skilled and capable councils who are the leaders at a local level in a disaster response. So they lead the disaster response, then they work through recovery, and as we're seeing with more frequent and more intense weather events, that recovery period is becoming a lot longer as well. All of that takes resourcing by councils. We're incredibly welcome and appreciative of DRFA funding, which is an absolute lifeblood for those communities who experience those extreme weather events. But at the end of the day, of course, there is a resourcing implication for councils. It is a core service of councils. And again, that brings me back to why having a higher level of untied funding that's available to councils, whether it is through financial assistance grants or another form, it's why it's so important, because it gives them certainty of long-term funding to be able to determine what is the highest priority to spend on their communities. And if it is because of a natural weather event, then at least they have that ability. When that level of funding becomes reduced, it leaves them hamstrung. So it is a really important element of our advocacy to have that untied funding increased.
Thank you. We're running out of time. Last quick question. The People's Climate Assembly has made a submission to this inquiry, which states that it is essential that emitters contribute sufficiently to climate disaster recovery funds for communities to rebuild their climate disasters. And by emitters, it's obviously greenhouse gas emitters. Do you have a view on that in terms of polluter pays?
I thank the member for the question. No, that's not a policy position that we have as a local government sector. We don't have a position on that matter.
Okay, great. But thank you very much. Yes, sure. Yep.
I was just curious, I'd seen a submission that the Queensland Government had made to the Federal Treasury at one point, recognising that I think stamp duty on insurance premiums here, so Queensland Government taxes 9% of the cost of the premium. And I noticed your recommendation that state and federal government should take all measures necessary to reduce the cost of premiums. Would you support a reduction in the state government tax on insurance premiums in Queensland? Is that part of the position of your members?
Well, I thank the member for the question. We think that this is such an important issue that all options should be on the table.
Including that one. Okay, thank you.
Thank you very
Chair.
much, Ms. Baker, Ms. Smith, and Ms. Green.
Thank you.
Really appreciate your insights.
Thank you very much. Thank you.
Someone say, okay, great. Good morning.
How are you?
Good morning. Good, thank you. How are you?
Great, thank you.
I now welcome Mayor Sean Radnage of Merway Shire Council, who is here in person, and Paul Hoy of Douglas Shire Council, who is on teleconference. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to the Senate committees has been provided to you. For the Hansard record, will you please state your full names and the capacity in which you appear today?
Thank you, Chair, and welcome. Much appreciated for the opportunity to speak this morning. My name's Sean Radnage. I'm the Mayor of the Merway Shire, and I'm here to present to the Senate committee this morning just about the issues and the challenges we have within insurance within the Merway Shire.
Thank you, Mayor Radnage. And could I go to Mr. Hoy, please? Just introduce yourself.
Thank you, Chair. I'm Paul Hoy. I'm currently the Acting Chief Executive Officer for Douglas Shire Council.
Thank you, Mr. Hoy. A little bit of difficulty in hearing you, but we'll come back to you in a minute. If we could start with you, Mayor Radnage, to make a short opening statement, please.
Thank you once again, and thanks for the opportunity to present here this morning on behalf of the people of the Merway Shire, but also South West Rock, which I represent as Deputy Chair. Good morning, Senator Faruqi. Thank you as Chair and your Senate committee colleagues for holding this public hearing into the impact of climate risk on insurance premiums and availability. It is very much appreciated by my communities that their concerns are heard by the committee. The Merway Shire Council is in the southwest of Queensland. I'm pretty biased. I believe we are the best part of southwest Queensland. We're 800 kilometres west of Brisbane. We have 4 towns in our shire: Charleville, Augathella, Morven and Claddy. The Warrego River is our main river system that runs past us. It is the start of the Murray-Darling River system, which goes all the way down to the bottom. We have 3,300 residents in Charleville. Agricultural is our main industry and obviously relies heavily on rain. The issue that we have post the substantial flood of Charleville Township during April of 1990 and the subsequent flooding events in 97, 2008, 2010, 2012, the residents of Charleville have suffered increasing insurance premiums. These insurance increases are to the point now where many residents can no longer afford to choose or not to insure their residences and small businesses. Consequences of the flood events from 1,180 houses and businesses inundated in 1990 to nil inundation in 2024 with mitigation in place. Just to add a little bit of a highlight, 1990, 1,180 houses, all commercial and industry inundated, cost approximately $45 million. To 2024, nil inundation, and we've seen rises of up to 300% in the last 3 months, from April this year. Mitigation, the construction of the 7.2 kilometre of levee bank in 2011 cost $11.5 million. The construction of the flood-free residential estate cost $3 million after 1998. Local government funded grants for raising homes in flood-affected areas. The cost of $8,000 per home, 20 houses to date, was funded by council. Clearing of the Warrego River post-1990, ongoing annual program, and Bradley's Gully diversion post-2008 at a cost of $400,000. The diversion of Bradley's Gully in 2014 added to our mitigation cost $12.8 million. As I say, we've seen insurance premiums have risen of up to 400%. In some examples, in our submission, I have and also in front of me today, I have 3,500 to 13,500. From 5,000 to 15,000. The recent flood in the Warrego River, Charleville, recorded at 6.72 peak in April, with this flood event being the 3rd highest flood peak at Charleville since 1990, and the 4th highest in recorded history, resulting in nil inundation due to the mitigation works of Charleville. Our concern within council that our most vulnerable residents will be the most impacted. We are seeing retirees who have worked all their whole lives, paid tax, paid off their homes, raised a family, have to abandon their insurance premiums and are fully exposed to being left destitute if tragedy struck. We are seeing families whose insurance premiums are higher than the house mortgage. We are seeing young people and families not being able to take out a housing loan because of the cost of insurance. Small business is facing extreme insurance costs and are not able to insure their buildings and stock. The cost of insurance is causing landlords to exit the rental market with little or no returns or on investment after the fixed costs like insurance, rates and repairs are deducted. can I say I'm very privileged to be here today because we've been working very hard to try and find a solution and working with those insurance companies. Some of those solutions was that we actually were about to put to the communities to put a complaint into the ombudsman, the insurance ombudsman, right to the 9th hour when we're just about to put that out on our socials. In the last 2 paragraphs, it says that the ombudsman will not rule on price variation. Now, we see that as a huge challenge because it sort of says to us that who actually regulates these insurance companies, to your, Senator, to your comment just before. Our flood mapping is, we're working within to get our flood mapping up to date, as I say, with our mitigation in place with our levies, but also our gully diversion. Now, what we're asking for the Senate committee to maybe put forward is, and you just brought this up just before, that flood mitigation and mapping is kept in a place, in a government agency, that these insurance companies actually come to that one place, and so we're quoting on apples. We have seen several points, and these, I don't want to be detrimental to any insurance companies, but when they say that the insurance premiums have gone up, they actually say that's because of the flood risk. But we cannot get that on paper. It's all done via the phone. Just one final point. What we're asking is, we're just respectfully asking the Select Committee on the impact of climate risk and insurance premiums that we seek the answers from the insurance industry as to how they are pricing their insurance premiums and whether that insurance industry is taking into consideration the mitigation that we have in place. We believe there's a market failure in that insurance industry for the residents of Charleville, and take into consideration that those mitigation measures, the majority of the Charleville residents and small business owners will be forced to abandon their insurance premiums and either self-insure where capacity is possible or rely on the public sector. Just closing, I would just like to say in my opening address that owning your own home in Australia is an absolute privilege. And if you're lucky enough to do that now, as with the rising costs, I believe that you need to be able to protect that asset. And with insurance premiums at the moment, we're seeing people not insuring, which is really scary for our shire. But thank you once again.
Thank you, Mayor Radnage. And if I could go to Mr. Paul Hoy, if you could make a short opening statement, Mr. Hoy.
Thank you. My name is Paul Hoy, and thank you for inviting me today. I'm the Acting Chief Executive Officer for Douglas Shire Council and have been its local disaster coordinator for the past 10 years.
Mr. Hoy,
Douglas Shire is accustomed...
Could I interrupt you for 1 second? We still can't hear you very well.
Okay.
So we'll just try and see what we can do about that. Just bear with us for a minute.
Yeah, I had a bit of trouble getting on some of the other ways to get into the conference, to the inquiry, so I'm on the mobile phone, but I can retry something.
Are you hands-free, Mr. Hoy?
Yes.
Did they say yes? Okay. Could you not be on hands-free? Maybe that will improve the sound a little bit.
I could certainly try that. Is that better?
Better. If you just speak a little bit louder, then I think we're good to go. Thank you.
Okay, we'll go. The Douglas Shire is accustomed to disaster impacts. However, the tropical cyclone and the subsequent flooding is the most significant natural disaster to affect the Shire in living memory. The Shire covers an area of 2,500 square kilometres between Wangeti Beach in the south and the Bloomfield River in the north, and is comprised of many discrete communities and the tourism town of Port Douglas. Shire has a population of 12,500 and depends on tourism and agriculture, welcoming 426,000 overnight visitors and 262,000 day visitors each year, generating $574 million and 2,500 jobs. Tropical Cyclone Jasper caused severe destruction to homes, businesses, properties and vehicles through flooding and landslip. Residents have suffered tremendous trauma from the disaster, losing homes, pets and livestock. The stories of survival are quite heart-wrenching. Council's infrastructure has been severely damaged from loss of roads and bridges, damage and loss of water supply infrastructure. Communities were isolated for weeks and in some cases months. Towns, including Port Douglas, were without water on numerous occasions, sometimes for 3 or 4 days. significant damage and access issues have affected tourism locations, and the Shire has suffered reputational damage. The ongoing impacts of long-term displacement of people and families, uninhabitable homes, loss of income and livelihoods continue to be the focus of our recovery efforts, and this will continue for many years. We know we can fix our roads and our water infrastructure, but repairing the social trauma and mental health impacts is a much longer journey. In the last 10 years, the impacts of disasters, particularly flooding, has noticeably increased on historical levels. Rivers are breaking records and then re-breaking records, with rain intensity causing riverine systems to react like flash flood systems. I'll leave it at that. Thank you.
Very much, Mr. Hoy. We might go to questions from senators now, and I might start on the other side with Senator Sharma or Senator McLaughlin.
Sure, I'll start if that's all right, Chair. Thank you. Just help me understand Charleville a little better. So that's about 3,500 residents. Is that about right?
3,500 residents.
Yep.
Yes, and we have two smaller towns outlying in the Shire, and Augathella has 300 and Morven has about 260.
Okay, but it's
3,500 in Charleville.
And is it mainly Charleville that's has been subject to flooding?
Augathella has a levy as well. They were inundated to about a third of their town in 1990, but Charleville is the main town that has the flood impact. Yeah. Right. Okay. And I saw in the submission that you sent us that we considered, I think yesterday, Chair. I think it's from a couple of local government areas that you're part of, South West Queensland Regional Association of Councils, I think. Is that right? Yeah. So you had some figures here about just some increases in premium that you've seen in Charleville from 2022 to 2023. So, one going from $2,100 to about $5,100 annually, $4,000 to $11,000, $3,000 to $6,000. A business that was $21,000 to be insured. So these figures are all sounds about right. That's 100% right.
And what's the median value of a freestanding house in Charleville? Like, what if you're buying a 3-bedroom, I don't know, 4-bedroom, 2-bathroom house, or 3-bedroom, 1-bathroom house? That 200,000.
Medium house prices around that 200 to 250.
Yeah.
On a weatherboard house with 3-bedroom. Newer houses are being sold around town for up around that 500 to 550.
Right. Okay. So it's quite a lot you're paying as a percentage of the value of the home as an insurance premium, right?
And that's, can I say, Senator, that's some of the, when these individuals come forward to council and they do present that the cost of the cost of the rebuild, their value of their houses are around that 1 million to 1.2. So they're disputing that. That
being the cost to rebuild it.
If they were to do that, would they build to that scale?
Yeah.
And would they actually build to that level? The insurance company has come back and said if you can get a quote to build a house under that, they're happy to take that and look at that pricing on that insurance. But yeah, that's mainly, you are 100% right.
And when did you notice, because you mentioned obviously a number of natural disasters and flooding that Charleville's been through, have you noticed similar spikes or jumps in premiums year to year after previous natural disasters?
I wasn't on council after the gully diversion was put in to help alleviate the levy bank in Charleville, to help with the whole situation. But there was a commitment made by one of the bigger insurance companies to cap those insurance policies because of that reason, that the mitigation was in place. Now that seemed to stick around for about 2 years, 2016, hence is when I got the opportunity to be on council. Yep. And since then we've seen a steady rise, not quite to what we have done in the last couple of years, but yes, that's been increasing per year as we've been moving forward since about 2016.
Yeah, okay. And what are the main insurance companies active in the market there? So if you've got a house there and you call up, who will offer you cover?
Suncorp.
Yep.
And their subsidiaries, or Elders are the other big one. We do see some newer ones come into the market, and that's what we encourage people to do, is shop around. Yep. But the two major are Suncorp and Elders Insurance.
Yeah, okay. And do those, those kind of aggregated platforms like Compare the Market, or those, do they work for Charleville? Would they spit out a few different options if you?
There's a couple of companies that actually we have a couple of people that do different Elders insurance companies. I suppose two businesses, but they can't compete against each other. So, but like I say, my encouragement is to everyone is just you need to shop around and let your fingers do the walking. But we are seeing that a lot of these companies, and I apologise, I could have probably put it in. My insurance for my butcher shop just come forward, and out of the 8 insurance companies the broker approached, 6 chose not to even tender because of that flood mitigation.
I was going to ask if you got insurance brokers active in the area.
We do for businesses,
Businesses
not
and
really
farms?
businesses and farms, and that's mainly their core business, but not really for the people in town.
For home and contents.
So,
Okay.
so Senator, just to add on to that, I've had conversations with one of those insurance companies, that, especially the one at 3.5 to 13.5, and I did say, if we were to, where does your risk appetite start to price this? Because if we were to get an insurance company come in to accept that risk with those levies, they could potentially take the whole
market.
the whole market if they were prepared to buy into that market. But at the moment, we just that's why we're here.
Yeah, because that's just what strikes me. There's a kind of an unaddressed market here, an underserved market that is actually a commercial opportunity for someone who can price the risk properly. Because obviously, if you put in place these mitigation measures, it's a low risk insurance premium. Then it's a low risk insurance proposition compared to what the market's pricing at. Then you can come in, take most of the market share if you're an insurance operator.
I wouldn't like to steal the Senator's thunder from the question raised just before. Our Shire, through our grants and subsidies, Works for Queensland and Local Roads and Infrastructure Program from the federal government, we've put, at the last 4 years, I think we've put about $2.5 million into the maintenance of that levy bank.
Yeah.
And that's our argument is we put $2.5 million of people's money into that mitigation, and for that reason alone, we've seen premiums go up 300%. My conversations with some of those bigger, especially the government agencies that handle things after the flood, is would we be better off letting that asset deteriorate? Because if it does flood the town, who's going to fix that? Who's going to have to come in and fix it? Government. But obviously we wouldn't, because that's our duty in this role, is obviously to protect our community. We've had conversations in the last month, and sorry. The last 2 months is after that flood. It's cost the insurance companies no money. It went up a metre up our levy. Everything ran really well. Everyone worked really well together. Local government, BOM, SES, everyone did. So we're going to compensate you by putting your insurance premium up 300%. Thank you very much to that insurance company. They should be thanking us for having that mitigation there.
For saving them a whole lot of potential.
There was no, that's our viewpoint. Like I say, that one there that went from 5 to 15, that's in the last 3 weeks. So when those residents come to myself or anyone on the council, I ask them to go back to the insurance company to please get on paper why that insurance premium has gone up, and why won't you insure? Why is it such a flood risk? A lot of the insurance companies say, and as we say, that's why they want that mapping kept in a place within government so that they're actually got to access that. I mean, I've had conversations with insurance companies that I say that, do you know we have a levy? And they say, no, you don't have a levy. So we haven't actually seen an insurance company come to our communities and see what we have. Not that, I mean, we're only one. We're a pimple on a pumpkin. I know that, but this is Australia problem. This is why we're so passionate about it. Because if we can find a solution here, it'll help everyone within Australia.
Thanks so much, Matt.
Thank you. Senator Sheldon.
Thanks, Mayor Rutledge. You've answered quite a few questions. I'll come to you in the moment. We'll try with Mr. Hoy, see how we go. Mr. Hoy, just again, thank you for joining us, and it's good to hear your voice again, hopefully, clearly. But I know we caught up just last month. One of the issues you raised during those conversations at Douglas Shire was the question of when water damage is caused by a cyclone compared to when water damage is caused by a flood or storm surge, and the implications can have for some people's insurance policies. And we heard evidence given yesterday, similar concerns about how that's assessed, where the concerns raised were both yesterday and also up at Douglas Shire Council and ratepayers, was that the feeling that insurers and hydrologists are fairly making assessments that damage was caused by one rather than the other, and not paying out claims as a result. Do you want to just expand on what examples or experiences that your residents have seen and observations the council's made?
Certainly, there was a lot of issues for businesses in the Mossman Township, and that was driven by hydrologist reports of where the water came from, whether it came from the Mossman River or whether it was water that sort of arrived as a result of the intense rainfall. Why that would matter, I don't know, because the result is the same. Anecdotally, people were saying that one hydrologist would do a report, but insurance companies use a separate hydrologist for their own business, so that there's this ongoing delay rather than just saying that the business was flooded as a result of what was a big flood event. And certainly I went to breakfast last week downtown, and went into a cafe and asked how things were going, and they still hadn't resolved their insurance claim, and that was, we're 8 months after the event now. So it seems that a lot of this is really a delaying tactic. It's, we had a very, very, very large rain event. We have a lot of creeks and rivers. That's the nature of the place. If the water can't make its way out the river, then it's going to find its way into streets and into people's businesses and homes. That's the fact of what happens when you get a 1 in 2,000 or 1 in 3,000 year event. So why the hydrologist intervention would matter so much, I have no idea, but it certainly held up a number of dwelling and business resolution to claims, and that's still ongoing. There's still many people that aren't in their homes because of this issue.
Mr. Hoy, it is still a bit difficult to hear, but I'll just, what I might do is put quite a number of questions on notice to assist, but that evidence was helpful. Thank you for that, and I'll go to Mayor Radnich. I'd like to hear as many examples that you've got, because I think it's actually important for these hearings to make sure that everybody in the insurance industry and this committee hears the real impacts of both mitigation and where insurance is still going up, even though mitigation and resilience has been improved, and concerns about lack of transparency, but the real impact, rather than just that language, the real impact of on ratepayers and our communities in various parts of Queensland, and as you've rightly said, Mr. Radnich, that we're hearing similar evidence from other parts of the country as well. So your evidence is important for your local community, but also across Australia. Yeah. This question of transparency, I saw you a quote from you in April that you'd contacted an insurance company on behalf of a local resident who had received a $10,000 increase to their insurance premium, and you were told by the insurer that they were not aware that the levy had even existed in Charterville, and you touched on that before. How long has that levy, again, you've gone through the length of time the levy's been there, but what's this question about transparency for community? Do you just want to expand on some other examples, but also the frustration of the community of hearing the community has put up money to improve the levy. They've improved resilience. They know that the pressure that's on their local council, obviously there's money spent one place, it's not spent another place. It means that, there's what can be done on infrastructure for the community is changed, because you're spending those large sums of money on levies to only find the disadvantage or no advantage being viewed by the insurers. What sort of examples of frustration you must be hearing from the community must be enormous.
It is quite enormous, and thank you, Senator, for the question. Can I just point out that from those floods in 2000, we had really good runs in the river in 2008, 2010, 2012. Then we had 9 years of drought, so it gets pushed behind, and council. That's why that large amount of money had to be spent on that asset to bring it back up to standard. But the community, I have several residents that aren't insuring, which is a really worry to me. As we said before, the reason we are very privileged that we worked with the federal and state government to put those levies in place from the last 30 years, and that is to build that resilience, to build that stability in your communities. So I have residents that aren't insuring, which really worries me in the fact that it's all right, we're talking about flooding, but what happens when we have a fire? What happens if something else comes forward? That conversation I had with that insurance company was a Friday afternoon. It was with a young guy. I asked him to put his dad on because it was beer o'clock and I didn't want to waste any breath. I thought if he didn't know we had a levy, how the hell can you actually quote on a job and put it up and not be aware of what you actually have in place? As we pointed out, that the one that's come out in the last month is the biggest worry to me, is 5,000 to 15,000, and we're talking 300 a week. That's before they pay the mortgage, put food on the table for their children. I've spoken to the state government about cost of living, and I'm not here to make a statement, but I don't think fuel stations is going to fix the cost of living, but insurance pricing potentially could. Point that into, I had an email overnight from the National Australia Bank about putting a manager in place in Charleville, which is so imperative. We see how many banks are getting shut down across the country, but they can't find a rental. Now, for a landlord to go in and build an asset in our part of the southwest is quite a substantial investment, but to look at that insurance before you even start. So we're looking at a normal house, 300 a week. Our average income isn't the highest within Australia. So they're potentially, the landlord's got to charge 500 a week before he even makes any money, before he pays his rates, insurance, mortgage. So that I see is the biggest challenge, is how do we, as a community, we work really hard to bring investment, but also bring more people to our communities and make us sustainable into the future. But I see this as probably a major part. It's actually gotten bigger, that we do have examples there, whereas the insurance premium was actually higher than the mortgage. So it's a challenge. Within that flooding in April, we had 3 properties that were about to be sold, but because when you have a flooding, it triggers an embargo across all insurance companies, and that embargo stood in place for 21 days, couldn't be lifted, they told us. So that held up those properties to be moved forward and sold, but we had no inundation. It just doesn't make sense. It just seems as if we're talking to the wall. But I'm more than happy, Senator, if you need any more information, bring that forward.
I'm certainly happy when the insurance companies come on, but also the Insurance Council of Australia to ask those very questions that you're putting to us to get the answers. And also, you know, the community needs to know what transparently how the funding and the arrangements are entered into. You know, as you rightly raised, you know, this question about, you know, what are the transparent reasons when somebody is flatly told that they're increasing their insurance by $10,000? You'd want to have 10,000 good reasons why it's happening. You at least want to have the courtesy of being explained to you, so you can actually say, well, that doesn't make sense, or that, you know, or I can understand why you're doing it, so I can actually then assess, should I be challenging it? It just seems to be ingenuous to turn around and just put those sorts of burden on the local community without clear justification. It's not even a question about whether the quantity, large or small, the justification for the quantity, the respect to the community, and the answers about to justify why it's actually occurred is critical. How do you think the community's feeling about how from insurance treating both the council but also local residents in that fashion? I know you've touched on this, but you know, the frustration must be enormous. But when you've raised this further, I know you've said, you know, quite rightly, Friday afternoon, and can you put somebody on there more senior? What was their response? Did they put somebody else on, or did they just brush you off?
It was a Roma company, and I was very happy that I'd known his dad that actually owns the business. So, yeah. And it was his son that I spoke to. Yeah, I asked exactly the same. Where do you find, you know, what pricing? Where is your risk? Because as I explained to him, seriously, if you were to come up with a solution, not just for Charleville and Merway, but you potentially could take the whole market. We just pointed on that before. But can I say, Senator, I'm very privileged to be here because our next step, we've been holding and waiting since we've been working hard with LGAQ in the fact that what we were trying to do was get to meet with some insurance companies of the bigger players, and that was to bring this argument, and this Senate inquiry has helped us bring our information together, because we wanted to actually just pinpoint, whether it was Suncorp or Elders, where is the risk? We're managing a risk, to your point. But this is bigger than just us, not just South West Rock. There's 4 shires in South West Rock that have 4 shires out of the 6 have levies, but also we have Darling Downs Council of Mayors. Now that's 12 mayors from Toowoomba all the way to the border. Now Gundawindi are within that, Senator, and they're the same. We've spoken to Andrew Hall from the Insurance Council of Australia, and we've several times, and we're just frustrated. Gundawindi have had a levy in place since 1958. Lucky for those guys that 1958 was their highest flood, so they put a levy bank to that height. They haven't had any inundation since then, but there's been, I'm not quite sure, I thought they said 30 instances where the river has run and there's been no inundation in town, and their insurance premiums are the same. It just doesn't make sense. So that it'd be excellent, because as I spoke to the Premier of our great state, I asked himself and the opposition leader that when we got the opportunity to speak to these insurance companies, would they come and accompany myself and my CEO? Because I don't know if they'll listen to Zorro from Charleville, but they'll listen to a Premier or potentially a future Premier. But that's why this is so important to have this Senate inquiry, because if you make them accountable, as I say, we feel as if they're unregulated. They're just doing their own. Whether I'm right, whether I'm wrong, I'm happy to take that on board, but it just doesn't make sense. We just want, I believe that my CEO put forward back when Suncorp and SDIO were formed by a state government. That's one of our recommendations, Senator, is that when there is market failure, that is, the government jump in and have, it was run by the government. The actual motion was that Queensland Government established the State Government Insurance SGIO on 1st of February 1917. The existing State Accident Insurance Office became the Workers' Compensation Department of SGIO. SGIO was responsible for insuring state assets and offering life insurance and general insurance, house, car, to the Queensland public. So that's one of our solutions also, is that government step in here and take some of that risk.
Yeah, thank you, Mayor Radich. It's given us a lot of food for thought, and also the evidence has been a great deal of assistance, so thank you.
Thank you, Senator Sheldon. Mayor Rednage, it sounds preposterous to me that insurance premiums are higher than mortgage, and that it's gone up 300%, you said, in the last few months. I'm just wondering if insurance companies are actually taking advantage of the increase of in climate-driven disasters, but also rising inflation, to just keep their profits up. Do you think there's a price gouging element in here?
Senator, in my other life, I'm a small business owner, and I'm pretty liberal thinking. To me, in my business, I pay the bills out of what I earn, and that's what's left. To me, the Insurance Council of Australia will tell you that the pool is sitting around $20 billion, but the cost of all those disasters is $24 million, but they've still paid out their shareholders. To me, you pay the bill first, and the shareholders get what's left. Like I say, I'll take this. They could shoot holes in me, it won't faze me. They don't buy meat, they don't vote for me, so I'm not real worried. But as far as price gouging goes, I'm not 100% sure. As I said, you've seen the examples within what my CEO has provided, and that 1990 they say is 1 in 180-year flood. The other day was our 4th highest, yet we had no inundation. It's like I say, this is not just our problem, but we just want to highlight how do we improve this. And how do we make it more affordable for our residents to live in these rural communities?
Does anything change when you tell insurers about the levy? Like they can kind of claim ignorance, but when you tell them there is a levy, do they provide a lower quote?
Senator, so what some insurance companies have put forward, and I believe there was one there in the examples that the council didn't have their flood height within their database. To me, I don't understand why the insurance company would come to councils to get that information. because I believe that could vary. But to me, that's why we're pushing that we do have our flood mapping, but it's held by NEMA or a department within government that makes these people accountable on where they get this pricing. No matter what disaster we have, whether it's far north Queensland or in southwest Queensland, but no, it doesn't. To answer your question easily, it does not make a difference because, as I said, majority of them don't even know that we have a levy. Roma, to our east, had their levy put in place. I think it's been in place 3 to 4 years, and their insurance premiums were held exactly the same by that same insurance company, Suncorp. But I've asked their mayor, and their premiums have gone up also, and they have flood mapping on their databases. We will provide that information if they come forward, but can I say we haven't had any insurance company come to council to ask for any of that flood mapping.
When we were in the Northern Rivers yesterday, quite a few people said to us that their experience with insurance companies after the floods was much worse than the disaster itself. 2.5 years on, people are still on the phone, on hold, with insurance companies getting nowhere at all. And you've raised this issue of accountability and also regulation. I wonder what you said you went to and asked the Premier and the opposition leader to come with you to the insurance companies. Did they say yes?
They're interested. I spoke to the Premier on Tuesday, and I did point out that I was speaking to you guys. Like I said, I'm not here to make a statement, but I'm not sure about whether the mechanisms they put in place within government to try and ease the cost of living. But this problem here could help the whole of Australia, not just and the whole of Queensland. They are interested, but they're not quite sure on how to tackle this beast. Obviously, it's a federal driven problem, which is really great. I'm very happy to have you guys on board to potentially tackle this. But more than happy to make as much noise as you'd like me to, Senator, because like I say,
okay, definitely. I think
definitely
you should make noise. But you were also saying that you think government should actually step in, and we know that the federal government did put in place a $10 billion reinsurance pool for cyclone hit areas. Is that something that should be expanded to actually include floods and climate-driven kind of disasters as well, to actually reduce the cost of insurance for people and businesses?
I think it could be a possibility, and I'll go back to what our CEO of LGAQ said. I think everything should be on the table to try and come up with this solution. As I say, this is a problem that's reaching all over Australia, so I'm not quite sure of the definite solution. As I say, we've even tried to go along that lines of helping the insurance company, that we're actually going to help you make money if you're prepared to take this into risk into different areas. As I say, there's levies all across Queensland. We are the most disaster-prone state, but there is mitigation putting in place, which is put in place by governments. So we're putting our money into that, but the insurance company aren't taking those into account. So I think that would help, definitely.
I do want also to hear a bit more about how people are faring because of these issues, and the Financial Rights Legal Centre, who has also put a submission to this inquiry, say that insurance unaffordability disproportionately impacts people on lower incomes, who tend to occupy a greater proportion of housing in more disaster-prone areas. Could you tell us a bit about these, you spoke about cost of living as well, the compounding issues that people are facing on top because of higher premiums?
So we have an example of a pensioner being in our community. They're on a potentially, I believe it's $500 a week, $20,000, and his insurance policy is $10,000. So before that pensioner, who has worked all his life and paid taxes and did what we said, brought up his family, for him to live, and he has 150 to 160 rent, which is subsidised by council. He lives in a council flat. If we do the figures on that, that leaves him about $4,000 for the rest of the year to live. If he pays his insurance, so he's chosen not to pay his insurance. So to me, that is not not fair. And this wouldn't be just an example within the Murway Shire. This would be right across. We heard about what's happening within inner Brisbane, and that was a comment made by the CEO of the Insurance Council of Australia that his 10th-storey unit, his insurance had gone up in Double Bay, but as I said, it probably is worth a bit more than what it's worth a house in Charleville, as I say. But those sort of flippant remarks, regardless, I believe show that they need to be held accountable and given some regulation on how to move. Just that point alone about the ombudsman. I know there's a point there that if they don't pay out, that's when you go to the ombudsman. But who regulates these people? If they're unregulated, it's got to come from government. It's what we've done with banks.
And it has real trauma for people who are living with this uninsured. We heard yesterday that they're always living in fear of the next kind of climate-driven disaster that happens, on top of everything else.
Senator, can I say, we had a flooding, and our fourth biggest flood since 1990, and those people on edge that haven't got insurance, the anxiety, who's the first level? I'm very happy to be a part of this level, is local government. We're the first line of defence, and to be able to defend that and be confident in those structures you have is so important, and that's why that information, that's why I worked really well with BOM. We knew the figures, we knew what was coming, we were in front of the game. That confidence alone for the next time will breed confidence. When we have seen a flooding event, and the 2010, we within those 4 or 5 years after that, we lost 30% of our population. We've worked very, very hard to build that back up. We're back up. We're in dire need of housing, and we're pushing with that flood-free subdivision to get houses out of that area to make more people more resilient. But the anxiety when you do have a flooding event, if you've got no insurance, it's quite high.
Mr. Hoy, we might give another try and see if you have an experience that you'd like to make us aware of people being underinsured or uninsured, and what sort of risk does that create, and how are people faring with that?
Certainly there's a number of people that aren't insured. I've looked at some figures for where there's been damaged houses for grants, and almost 300 of those applications are uninsured properties. I know that because the insured properties get taken out of the applications. I've looked at one other part of the Shire, 17 houses, only 3 were insured. I think the important thing here is for uninsured houses, it's the government, all 3 levels, that then come in and spend money, and it's quite significant. So I looked at some figures last night, just on the spend on that small number of houses, and already we're at something like 211,000 per dwelling, and that doesn't build back their house. That's just on cleaning out their house, providing some accommodation, those sorts of things. It's got none of my staff time or my time or state government staff time or anyone else's time in it. That's just purely cleaning out in and around the house and providing some accommodation and some small grant money. So that's a significant cost which is still to go on. And I have heard of uninsured businesses say it was the best thing that ever happened to them because the government assistance has been so good. So, but that creates a whole different level of cost to government and everyone else. So I think somewhere there has to be a way to spread the cost of premiums. My belief is that the insurance companies won't or will price out people that they don't want to insure. And then that will then be left to the 3 levels of government to pick up the pieces. I hope that makes sense.
Thank you, Mr. Hoy. Mayor Rednage, you said that everything should be on the table, so I might take you through a few things that some other submissions have raised and just see what you think about them. One of the proposals to make insurance more affordable is through the Insurance Council of Australia's submission, and that is for stamp duty on general insurance premiums, which is imposed by states, to be abolished. Do you think that would make a difference, or Is that something that should be considered?
Senator, if it's 10% on that $15,000 rise for an insurance policy, that's $1,500, so it's still $13,500. I don't know if stamp duty it would definitely make a difference, please, but I'm not sure it's going to be the huge deal breaker that potentially could bring that cost of living down.
Yeah.
That's only my opinion.
No, that's what I want. I want your opinion. You're here. And another thing that I saw is that Vermont in the US has recently introduced laws to make big fossil fuel companies pay for the damage from disasters fueled by climate change. And these laws require big oil companies and others who have high emissions to pay for some of the damage based on, what damage it was and what sort of event it was. So it's a polluter pays principle in some ways. Should that be on the table?
Senator, we're very privileged in some ways that we are the greenest part of Queensland, and we have 89% of the carbon credits within the Southwest Rock area, 33% of Australia's carbon units within trees in the whole of Australia, and we can't get those companies, I won't say all, but we can't get them to donate to the local show or gymkhana. So if the government could please, if that was the case, more than happy to have that on the table, but just to put that in perspective, and that's with the carbon farming. I know things have changed with the government and much appreciated, but that was back in the start when there was lock up and walk out. We can't get those companies to donate to those local events, but more than happy. If that's the case, if that's how government's got to do it, more than happy to bring that forward.
Yeah. Thank you very much, Mayor Radnage. Any other questions from anyone? Otherwise, what we might do, Mr. Hoy, especially with you, because we couldn't hear you very well, and apologies for that, is put some questions on notice, and maybe for you as well, Mayor Radnage, and those questions will be due by the 23rd of August 2024, the answers to those questions. Thank you so much both for being here and giving us some really excellent information.
And thank you once again for the opportunity, and good luck, and more than happy to be involved. Thank you.
Thank you. And the committee will now suspend until 11. Good morning. I now welcome representatives from Suncorp, Dr. Whitley, who is joining us in person, and Mr. Bucket, who is on teleconference. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, would you please state your full names and capacity in which you appear today? Yes, please go, Dr. Whitley.
Thank you, Chair. I'm Dr. Reece Whitley. I'm the scientific specialist in the Natural Perils Pricing Team, which sits in our Consumer Insurance's Pricing and Analytics Division.
And if I could go to you, Mr. Bucket.
Thank you, Chair. I'm Tim Bucket, and I'm the Accountable Executive for our pricing function for home and motor insurance in the group.
Thank you. I now invite you to make a short opening statement before I invite committee members to ask questions.
Thank you. Thank you, Chair and committee members, for the opportunity to appear today. I will apologise up front. We were of the understanding we could join by video conference, so apologies to joining by teleconference. But as is well aware, as a national insurer, Suncorp Group provides products to millions of Australians through our brands Suncorp Insurance, Amy, Geo, Apia, Shannon's, Terry Shear, Bingle and Vero. Suncorp's purpose is to build futures and protect what matters, and it's at the core of everything that we do. I've worked at Suncorp for over 18 years across a variety of roles in banking and insurance across our New Zealand and Australian businesses. And just by Reece here today, as he mentioned, he's a climate scientist and part of our natural hazards modelling team and represents the strong ability that we have built up in our pricing function over the last years with Reece's presence. Reece will assist with questions specifically on the climate science and its impact on insurance losses. We are pleased to be here to contribute to the committee's inquiry into the impact of climate risk on insurance premiums and availability, the physical, financial and psychological toll that extreme weather has on people, communities, businesses and the economy each year is long-lasting and costly. We know that the forces of nature continue to accelerate through climate change. Climate change is real and it's a today issue. We know to a degree that impacts can be reduced, in fact avoided. Unfortunately, this current built environment is a consequence of decades of planning, putting too many of our citizens in harm's way through no fault of their own. This, coupled with climate change, means focus and attention is required. Corp has a history of working with governments to develop and deliver public policy initiatives that reduce the impact of natural disasters on our communities and customers. Suncorp has advocated for a 4-point plan. 1, to invest in mitigation infrastructure that protects communities. To invest in mitigation at an individual property level to improve resilience. 3, to enhance building codes and planning to ensure that future communities are not placed at risk. And 4thly, the removal of unfair and inefficient taxes and charges that impact the ultimate premium that often the most vulnerable customers end up paying for insurance. We understand the importance of supporting community resilience and will continue to advocate for community resilience measures and uplift our capabilities to better understand climate risk and opportunities around this. Our pricing team conducts regular reviews on all weather-related perils that have a material impact on our consumer and commercial customers, including storms, tropical cyclones, extreme rainfall and flood, severe hail and bushfires. We're constantly building our internal capabilities around climate science by exploring historical trends in extreme weather through climate indices, building sophisticated loss models to quantify weather-related tail risk, collaborate with experts in the scientific community to better understand climate extremes and how they expect to change with the increasing global temperatures. Suncorp has made a significant investment in an industry-leading tool to better understand and the development of climate risk across Australia and the implications on operations and our customers and communities we serve. We have looked at and modelled 60+ years of climate data in an attempt to understand, is the climate changing is by how much and specifically where. Then to model impacts this has on natural hazard events that cause insurance losses. Significant trends can facilitate discussions around pricing and underwriting and provide strategies, disaster preparedness, and support business cases for governments and individuals on mitigation actions. Continue our progress of investing in mitigation initiatives to reduce risk and increase resilience across Australia, but it is a long journey. We have helped rebuild communities to flood, fire, cyclone, and provide the day in, day out reassurance that communities and our customers need to plan their life with confidence and be able to sleep well. We're here to support community genuinely in whichever way we can and welcome any questions.
Thank you, Mr. Bucket. Dr. Whitley, do you have an opening statement as well, or should we start with the questions?
We can go straight to the questions.
Great,
Chair.
thank you. Senator Sheldon, over to you.
Thanks very much, Chair. In the submission from Suncorp, you welcome the funding for the Bundaberg flood levy. The Bundaberg levy is a major investment in the flood resilience of Bundaberg and the economic prosperity of that region. We know how critical it is to safeguard those communities and businesses. The Commonwealth and Queensland Government committed $174.7 million to protect homes and businesses in Bundaberg and the greater Wide Bay community for future flooding events. The project is also supporting, just of interest, also brings in 100 jobs into that area. This investment should help to put downward pressure on insurance premiums, and I want you to just go to the Bundaberg levy, and I know Dr. Whitley, you were here earlier, and we were talking about the levies in a number of councils just previously, and particularly Merway Council, and also even though there was a levy, as I understand it, in Roma, where there was some quite decreases in decreases in insurance costs for local community. So how 174 million invested by Commonwealth and Queensland Government into levies in Bundaberg. The evidence we just received from MOA, investment over years into a levy, more and relatively recently $2.5 million into a levy there. Premiums go up, and then in Roma, levies placed there and premiums go down. This is, you can see where there's a disconnect for communities and also, frankly, for me, about why there's such a disparity of responses, even though there seems to be a substantial risk reduction as a result of those levies being put in.
I'm happy to give an answer towards the physical risks, and then happy for my colleague Tim to answer further on that. So when it comes to levies, there are different standards of protection. The levies are designed to protect at a particular flood height. You can design a flood levy for a 1 in 20-year event, up to 1 in 50-year event, or a 1 in 100-year event. If you build a flood levy to a lower standard of protection, a weather event that is extreme enough will overwhelm those defences. So there's one issue. The second issue is when these standards of protection are designed, they are typically based on historical information, which is limited. We don't have a continuous record for everywhere across Australia. When it comes to weather extremes, we can't just rely on human observations. The weather system can produce events that are well beyond our experience, which is what we have seen with the East Coast flooding in 2022. So these parameters essentially, while it is fine to put a levy in, and for the most part, they're a very effective means of protecting the community, and they will result in a discount or a reduction in premium. However, not all levies are the same, and we do assess those levels of that standard of protection when we do our risk assessment and do the risk profile for the community. And then we have to make sure that that flows through, because if we do have an event of an extraordinary level, those communities will flood regardless, and we will have to bear the cost. I'm happy to pass to Tim to explain this.
Mr. Bucket, could you then just go, I mean, I don't think anyone here wouldn't, and thank you, Mr. Whitley, so you answered partially the question of what I was asking, but not what the point I was trying to make, which Mr. Bucket might be able to do. We understand levies are levies. There's levies, and there's levies, all right? So, what is clearly, what is not clear to me in the case of Merwa is that when they spend $2.5 million on improving the levy, why is the risk profile, the costs going up substantially for that community? That's what my deep concern is. So, Mr. Bucket, can you go to that?
Yep, absolutely, Senator. Thank you. I was listening to that previous discussion, Merwa. Whilst not entirely familiar with the Merwa scenario, we would more than happily look at that. I'll talk you through generally how we think about it, and I'll use Lismore probably as a better example. Having grown up there myself and lived there for 18 years, I'm very familiar with the flood experience. But the way we price risk is an expected loss on an expected loss basis. What's the probability of an event occurring, and what's the likely cost when that event occurs? And if we say hypothetically in a Lismore scenario, there's a 1 in 10 chance of a flood above the levee, 10.3 metres. And if a house was affected by a flood above that, it's a $50,000 loss, which is receivable in terms of a fit out. Then the technical premium for that would be $5,000. 1 in 10, $50,000 claim is the way we calculate an expected loss and ultimately price the premium. But if the levy were lifted to a level that it then became a 1 in 100, to Reese's point, then the technical premium would drop from 5,000 to 1,000, i.e. every 100 years we'd have a $50,000 loss for that particular risk. So you can see that we do apply that approach directly when mitigation occurs, and we've got a strong track record of that approach in Roma, where we advocated strongly for the levies and premiums dropped by up to 90% as a result of the levy that was implemented. Noting in our submission, we are very big supporters of the monthly levy and congratulate the governments, both federal and state, for proceeding with that initiative. And we've committed publicly that we believe premiums will drop on average by around $1,000 as a result of the Bundaberg levy. I come back to, I can't talk to that specifics, but I would be more than happy to have a look at that from our team's perspective and look at the differences between that levy and the change in the risk cost that levy has delivered. But just one other point I would say, and happy to go very deep into, there are other factors that impact insurance prices than just flood. There's 9 major perils that we model. Flood is just one of them. In fact, 50% of our expected loss in natural perils sits in storm type and hail. So flood is about 15% of expected loss in terms of the overall. So it's not just flood that impact premiums. Things like building construction costs as well impact premiums. So a lot of different factors there, but more than happy to bring it back to the committee if it's required.
I'm sure my other colleagues will probably drill down that some more. I want to go to a couple other subject matters very quickly. There were in the evidence yesterday in Ballina and in discussions that took place that there were people that were that had been flood affected. They had put to the insurance, and I'm not saying Suncorp, I'm saying insurance generally. They put to the insurance company that they wanted to improve their property to make it more flood resilient, and they were told that if they were to do that, that they would have to realise the same for same at that point before the building commenced. It just seems to me, logic seems to me, and maybe you can explain to me why this point's not accurate, but logic seems to me that someone realising to improve their property, to build back better, in a case of a house, a homeowner, bearing the realised price at one point when the actual price 18 months, 2 years later could be substantially more, is taking a double whammy for building back better. Also, does that transfer, and separate part of that question, does that transfer then not only the cost onto the property owner, not only does it reduce resilient homes, but also it puts the premium cost on the property owner and the premium risk and the risk onto a same or another insurer further down the track if that property is not improved because of the realising loss too early by having the property being realised 18 months or two years before building. Have you got some comments or observations on that, Mr. Bucket?
Yes, I do. Thank you for the question, and I 100% support that sentiment, I think, behind that question, which is reflective of our 4-point action plan. We advocate very strongly for investing in resilience and mitigation at an individual property level. In fact, have played a key leadership role, particularly with New South Wales and Queensland state governments in their resilient home funds programs post the 2022 floods. Helped design and participated in that, and we encourage more. We have it as a key policy feature in our Suncorp insurance product, which is Build It Back Better, which for major events we have an allowance for customers to upgrade their property so that it is more resilient next time for weather events. I can't speak on that specific scenario that you referred to and where it is, but I agree with that general sentiment, and Suncorp Group strongly supports individual mitigation at a property address level.
So, Mr. Bucket, how I'm not asking you to answer on behalf of specific competitors, but as a general question, how often is that approach that Suncorp's taken replicated across the insurance industry?
That's probably a question you're better off asking some of the other competitors who do appear in this inquiry, I believe. I can only restate that we're strong advocates of investing in mitigation. There are complications with that, I would say too, but we think the only way to permanently reduce premiums is to permanently reduce the risk. And the way to do that is to invest in mitigation either at a total community level or at an individual property level.
So probably, Mr. Bucket, just to make it easier then, are there some companies that take that approach and some companies that don't take the same approach that Suncorp is taking?
I'm not aware of many competitors who offer that same type of approach, but that may be unfair on some of my competitors, so I would allow them to speak for themselves as they appear.
Thank you, Mr. Bucket. The other part of that question then goes to, you mentioned there's some complications with the approach on mitigation for households. You just want to just explore that a little bit more about where there are some tensions in households?
I think just in the contractual and regulatory constraints at times around the insurance contract is replaced for like, and it does present complications even when someone comes on. And if you play that out, the challenges with cash settlements, you might say the logical approach is if you had the means and will and your property was impacted by an event and you and some insured entitlement was $100,000, but you want to spend $120,000 to lift the resilience of that, the only real way to do that is probably through cash settlements, and that comes with constraints and challenges in the industry. The challenges and constraints are more in insurance contracts rather than anything else. Maybe
you take that question on notice a bit more for some more detail, and I'll just have to move to another subject, so I need to share the call around. Chair's rightly reminding me. There was we had the Tweed, again, I'm only asking for a general response unless you have some specific knowledge, but the Tweed Residential Park Homeowners Association appeared in Ballina yesterday, and they raised that the CIL insurance for that were paid to the residents in the residential park was done in a fast, quick matter, sometimes paid out within a couple of weeks, sometimes paid out within a few months. They were mindful that they said the evidence they gave that the bulk of the monies, if I'm recalling it correctly, was less than 100,000, and quite a large proportion was less than 50,000. The concept of the reasons why CIL would pay out quickly, and then why the complications of not paying out for other insurance examples that they were giving regards homeowners, some work that they were doing. It'd be helpful again to sort of unpick the disparity of approaches, but for our knowledge and edification would be good.
Yeah, the knowledge of the committee, I'm sure you're aware, CIL is one of our products, so a specific knowledge. I think what tends to happen with caravans is they're unrepairable with a major flood, so they tend to be cash settlements, and therefore by the nature of it, you can settle very quickly. The claims do take a long time, particularly with homes, is when you're rebuilding a home and planning. There's issues with scope, and that can cause, and even just customers' choice of wanting to do things differently take time to lock down scope and agree scope. And then you've got issues like the supplier builders when you have a crisis where we had over 50,000 claims in that 2 or 3 weeks in 2022. Just can't literally find enough builders to build more homes in that period of time, so that does push some claims out. So in that case, the cash settlement process is much quicker and easier. Clearly, once you've established there's a loss, you can settle that quite quickly.
Thank you, Mr. Bucket. I'll hand back to the chair.
Thank you, Senator Sheldon. Senator Sharma.
Thank you, Chair. Just if we could, if you wouldn't mind, I know Senator Sheldon's asked about Merway Shire Council. I understand, Mr. Bucket, you weren't here or you weren't dialed in when they were appearing before. Is that right?
I was listening in, so I did hear a bit of that conversation. Yes.
Look, if it's possible, could you take on notice some of the questions they raised about the mitigation measures that they have put in place and what impact they've had on premiums, and in particular whether and how Suncorp, who is active in the market as I understand it, has made themselves aware of those mitigation measures and levy expansions and whatnot, and how that has factored into your risk profile for Charleville, but also the council more broadly, and the impact on premiums?
Yeah, absolutely. We're more than happy. And as I mentioned earlier, I think we have a very strong track record, not only advocating the change, but being on the record as to what would happen when that change was implemented, like we have in our submission on Bundaberg and like we did with Roma. So be very, very happy to look at that scenario, Muwar, and look at the impacts on the change flood risk as a result of that levy and how that's reflected in the premiums we offer customers in that community.
Thank you.
Senator McLaughlin, there was some conversations this morning with the local government association and the mayor, expressing concerns that they don't feel the pricing is transparent. Do you have any response to that?
I think that's a question for Tim, if he doesn't mind.
I'm not sure, Mr. Bucket, if you heard the sort of context of it, but it was about they expressed some frustration, more than just the variant for their perceived variance in premiums, but also that they couldn't understand why a particular premium had been arrived at. Do you have any response to that from Suncorp's perspective?
Yeah, I do, and I absolutely appreciate the sentiment. It is a complex, unfortunately, it is a complex task to try to price the expected loss at a risk address for the next 12 months, particularly when 2/3 of the loss is driven by natural hazard events. And we do take a very sophisticated approach. That's why I invest in people like Reece here. So I do accept that, and our endless pursuit is how we make that more transparent to our customers, particularly in cycles like we're going through. Unfortunate cycles we're going through, it's a hard cycle, claims are high, and therefore needing to price through some of that claim cost. It is difficult. I totally acknowledge that. There's many elements that go into the price of a risk, particularly a home or commercial risk. It's not just flood, bushfire, cyclone, earthquake, even southern states, hail, storm, storm surge. We model each one of those perils and estimate an expected loss at a risk address, which builds the price of the premium. I'd also add things like, even if the frequency of events doesn't change, so we calculate an expected loss by multiplying the probability of the event occurring times the loss when it does occur to get expected loss. Even if your frequency doesn't change, your cost could change due to things like building costs. And I note in the last 4 years in the ABS stats, construction costs are up over 30%. So another way to think about that, then you could build a levy, your frequency may change down, but your expected loss may go up over 4 years because of that construction cost. Just one small example, but overall, I absolutely acknowledge the complexity of it, and we continue an endless pursuit of trying to communicate to our customers what's in there and why is it changing, and we need to do more of that.
Back to you, Chair.
Thank you very much. Thank you both for being here. I might start with the cost of rising insurance. And as far as I'm aware, for an entire year, and this is from June 2023 to June 2024, insurance inflation has been in double digits and much higher than anything else being measured by the ABS. Is this because of increasing climate-driven disasters and higher building costs contributing to this increase, or is it something else?
Sure. So I'll address the climate risk component. Go for it, Tim.
Yeah, Reece, if you don't mind, I'll just pick up the overall movement, and I might hand back to you, if that's okay, on the climate risk driving that. But overall, if I look at in the Suncorp Group's perspective, I'll come back to home insurance. 2/3 of the costs, expected loss in a home policy related to natural hazards, which is the combination of all those 9 hazards I talked through, plus the reinsurance expense we pay to international reinsurers to support us for the very, very large events. And over the last 4 years, that total cost has increased 47%. And so that is a significant driver of the premiums in recent times.
So was
but it would be in error.
47%, Mr. Bucket? I just wanted to check that figure. 47?
47%.
47,
yeah.
okay.
47%. Now I'll hand over to Reece in a minute, but it's dangerous to draw that, and that's as a result of the significant natural hazard events we've had over that 4-year period. You could just conclude in probably an error to say, well, climate change is driving a significant frequency and severity change. That is not entirely true. There's natural variability in the weather cycles. But I might hand over to Reece just to talk through in terms of what's driving that and what do we conclude around the climate science and natural hazards.
Yep. So I guess the question is, can we address whether extremes, the behaviour behind them is changing over time? Is that due to climate change? So there's a complicated answer to that. There is no simple soundbite I can give, so I'm happy to explain it.
I just want to know what your increases are attributed to. What is this 2-digit inflation, which has been,
Yep.
insurance inflation. What is causing that?
Sure. So if we were to address the role of climate change, it would be small, less than inflation, on average probably less than 1% change on year. We can't ignore, as Tim mentioned, the role of natural climate variability. We go through...
Well, we do know that the disasters are happening more frequently and more intensely because of climate change.
We know that climate change will make weather extremes more frequent and more severe. How fast that change occurs is less clear, because we're dealing with the noise of the natural cycle, the natural oscillations in the climate. You have a swing between El Nino phases, it goes to neutral to La Nina phases, so that's the Pacific influencing climate over Australia. You also have the Indian Ocean influencing climate over much of southern Australia, and then you have activity in the Southern Ocean. This provides noise across the signal, so it's very hard to say that this particular weather event would not have happened without climate change occurring.
Yeah, sure. I don't want to get into a debate of
Yes.
what is causing climate change. My question is very straightforward.
Yes.
Why is this double-digit insurance inflation happening now?
We've just gone through a triple dip La Nina period, and during these, the La Nina phase of the ENSO cycle, we do see a increase in these types of weather extremes, particularly flood, as you're very aware, tropical cyclones. We're not certain the role that has with thunderstorms and east coast lows. There may be a signal there, not clear. But certainly activity is up. And because activity is up, you're going to get more events, and we're going to get higher claims costs.
Okay.
And so that does have an influence on our pricing. When these weather events occur, it becomes evidence to us about how the risk profile is changing across Australia. So we must incorporate that information in the way we determine premiums, unfortunately.
Okay. So I guess the predictability of these events is very difficult. They're very difficult to predict, right? So
Yes.
does that mean that this inflation will keep going on?
No, not necessarily. If we go through a neutral climate period for the next couple of years, or even to El Nino, you would see less activity. That doesn't say that a big flood event will occur. You can have a massive flood event in an El Nino year, but I can't predict that. No one can. But on average, and that's the way we price, we would expect those events to be less frequent, and so less claims would come in, and so we don't need to make these big jumps.
So that's home and contents insurance, I guess, when floods happen.
Yes.
Why are motor insurance, why is that increasing? Is that because it's been spread out?
So for motor, it's more complicated. I'm happy for Tim to jump in here.
Yeah, I'm happy. They're actually very uncorrelated in terms of what's driving premium increases in motor and home. The motor portfolio has a very small, relatively small exposure to natural hazard events. Yes, there are losses during a natural hazard event.
So why is that increasing?
But less. Yeah, that's increasing due to very different factors and mainly supply chain. So at a big picture level, when COVID hit, people drove cars less. There was no cars to repair. Air industry itself took capacity out, so had fixed costs and repair capacity out. Then when COVID, so people got back in their cars and drove again, there was back to normal frequency of accidents, and there was a long queue of cars to repair and no one to repair them. And that drove significant labour inflation, for example. Last year, we experienced 22% labour inflation in the cost of repairs. It drove up used car prices. The price of vehicles is one of the biggest factors that influence the cost of a claim. Used cars was actually accelerated or increased in value through COVID. So that drove a higher claims cost, which needed to be responded to in pricing. So very different factors in the motor book versus home, and mainly relate to supply side constraints and inflation in repairing motor vehicles.
Okay, just moving to another topic. According to the climate-related disclosure report attached to your submission, Suncorp is committed to phasing out direct investment in thermal coal by 2025. I just want to know, does this commitment relate to ensuring their assets and both debt and equity investments that you make?
I can answer that question at a general level. We're absolutely committed to our...
No, I want to know the particular, sorry, I want to know at a particular level. I know that you have made that commitment. I just want to know, does this commitment relate to ensuring their assets and both debt and equity investments that you make? Or is it one or the other?
I would have to take that question on notice.
Okay, thank you. And how are you tracking with that commitment?
Very good. We are very comfortable with those commitments and tracking very well. The team are working very hard to deliver against all commitments in our action plan.
So how much have you already phased out? Because there's just one more year.
Yeah, again, I would need to, I'd take that question on notice to consult with my colleagues that have expertise in those areas on the portfolio.
Okay, I might put a few other questions on notice as well then, just about that.
No problems.
But maybe I'll ask another one, see if you have an answer for that, or that might be put on notice as well. Because I understand that Suncorp will also phase out of underwriting oil and gas by 2025. I just wanted to know if this covers gas-fired power and gas pipelines as well.
Again, I'll take that on notice.
Yeah, okay.
Generally speaking, we are committed to phasing out all that underwriting in support of those assets. But we'll take it on notice for clarification.
Okay. Yeah, thank you for that. I just want to go back to a question Senator Sheldon was asking about what we heard yesterday when we were in Ballina from the Tweed residential park homeowners. Although CIL paid out that insurance much quicker than any others, but then they also refused to insure those people again. And the only insurer that would insure people, and I understand that 10% of the people there have now been insured by RACQ. I'm just wondering if you have any insights into why another insurer could insure them, but CIL, who is owned by Suncorp, wouldn't. Is it to do with profits? Could you not make enough profit there, or what was the reason?
We made a decision post 2022 to not insure on-site caravans in high-risk locations, and it came down to an experience. There's one caravan park, Hawkesbury, where we suffered total losses of $19 million on premiums collected of less than $20,000. I don't think it's anyone's interest. In fact, all the rest of the customers in the CIL portfolio, if we continue to insure that type of asset where we're not collecting enough premium to pay for the losses. So until we can get to a little better understanding the risk at a particular risk address with our caravan portfolio, we thought the best option was to withdraw. Now, I can't speak on behalf of our other...
No, we will talk to them later on this afternoon after you all. So you said it was to do with the losses of the corporation, and that was one of the reasons. Yes. Yes,
of that particular sub-segment of the portfolio, yes, and that's on-site caravans, which tend to sit by rivers,
Yeah. So in the past year, insurance premiums have grown at their fastest rate in 22 years, well above inflation, as you know. And according to Swiss Re, 1 in 8 households can no longer afford insurance, which is up from 1 in 10 in 2022. Meanwhile, the Suncorp Group has posted a net profit of $510 million from its insurance division in the 6 months to December 31st. And that's up 52% on the $336 million it made in the same period of 2022. In its consumer insurance division alone, net profit jumped from $32 million to $203 million, up an incredible 534%. I mean, you're talking about not making losses, but here is the company making massive profits. Can you explain these massive profit margins?
I don't think they're profit margins. Total profits on a very big capital base, on over $10 billion of premiums, and an exposure to risk of north of $7 billion as possible losses that we could incur. So we do consider profit in the context of what return we get for the capital we need to that, and we do believe it's very, very important that Australia has a strong and sustainable insurance industry, that we are here to rebuild towns and rebuild houses when disaster strikes. So it is important that we earn a reasonable return on that capital.
But that's not actually
I would
happening.
say to the issue.
Sorry, Mr. Bucket, that's not actually happening. I mean, I'm not saying it's just Suncorp, but we have been hearing over the last 2 days from people in the community who've been waiting 2.5 years. They say their experiences with insurance companies has been worse than the actual disaster that they faced. And we know that insurance is now becoming unavailable to many in the community, or many are underinsured. So that's actually not accurate to say that your company is there to help rebuild, because you're not providing insurance, as you said earlier, to some at least, because of the losses. So I guess my question to you is, what do we do? Yes, we can see that climate-driven disasters are breaking the insurance system. But there are communities on the ground, people on the ground are really suffering. These are people who are your customers as well. I guess what would be, I know you've given some recommendations, broad recommendations on what could be done. And you know, what could governments do? How do governments step in to make things better and insurance affordable and available for communities who need them?
Yep, I could tell you. Firstly, we are acutely aware of the impact of the experience customers are having around some of these large events. We have submitted and appeared in front of the flood inquiry and continue to honour our commitments to the communities we're in. I've been very open about the fact that we processed more than 50,000 claims during that flood event, and a very, 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 very large majority of those people are happy and are in their new homes, except that we didn't get it right all the time. And our approach is to listen and learn from that and change our practices going forward. We are very committed to continue to do a better job of serving our communities. I'd say, as an overall experience, we've rebuilt some of these towns. So that's my comment in terms of which it's important that we're here to rebuild it, that we've got financial strength to be here and pay out those billions of dollars of claims when those large events do occur. And we will continue to work with those scenarios where we haven't got it right and commit to getting it right going forward. But coming back to the specific recommendations, I come back to our 4-point action plan. The best way to significantly and permanently reduce premiums is to significantly and permanently reduce the risk, and through mitigation and action. And particularly for our most vulnerable, we call on government support, both direct investment through grants, to either relocate or invest in lifting the resilience of properties so that the risk drops, so that the premiums will drop. And we maintain that's the best path forward for governments.
Thank you. I think Senator Sharma has a couple of quick questions.
Yeah, thank you, Chair. I was just noticing in the submission we received from the Insurance Council of Australia, Mr. Bucket, that the Insurance Council says that after peril risk, the second biggest component of the cost of insurance premiums is taxation. Would that be your understanding as well?
Inflation, yeah. I think if I go back to that scenario of roughly natural hazards increased by about close to 50% the last 4 years, the construction cost index, the ABS's numbers, that has increased by 31%. The average cost to rebuild a home is 31% higher today than it was 4 years ago. So if you think about what we're insuring the event to replace or rebuild a house after an event. So inflation, construction cost inflation has a big impact on the ultimate cost of an event, and therefore the premiums customers pay.
But just what component of the premium is taxation paid to either state or federal governments?
Oh, sorry. My apologies, I thought you referred to inflation.
Taxation.
Absolutely. So, yeah, sorry, my apologies. Yeah, stamp duty, and it does depend by states. The stamp duty and GST, because they double up on each other, then that can be as much as 25% of the premium in some states and territories. So it is significant.
And what's stamp duty here in Queensland on a home and contents insurance premium?
I'd have to take that on note. My apologies.
Okay, if you wouldn't mind. And then just looking at the size of the most expensive insured events. So I understand the 2022 New South Wales, Queensland floods were the most expensive with about $6 billion in claims. But looking back in the history, as I understand it, the other ones are all quite some time back. So Eastern Sydney hailstorm, 1999, $5.5 billion. The Newcastle earthquake in 1989, $4.24 billion. Cyclone Tracy back in 1974, $5 billion. Is that? I mean, I guess what's striking about this is obviously we've had some very big insured events in the last 2 years, but some of our biggest insurance or biggest claims on the insurance sector were actually 30 or 40 or 50 years ago. Mm-hmm. Is that right? Am I missing something? Was there another big events in the intervening periods?
I'm happy to take that question, Tim. So the data might be outdated there. The 99 hailstorm is certainly the biggest event we've had in this country.
Bigger than the 2022?
$12 billion, roughly.
Right, okay. That was the Eastern Sydney hailstorm?
Yep.
Okay, so $12 billion, okay.
Approximately that. I can't give you the exact number, but of course that's inflated to modern day.
Yeah, $12 billion in today's dollars.
Yeah.
Yeah, okay.
And similarly, Cyclone Tracy would probably be around 11 billion as well.
Okay.
And there is a difficulty there trying to equate historical events with present ones. So it does show that when we go through these cycles, we certainly get these weather extremes that emerge. And they have emerged in our history where we haven't really had the resilience we have today. We still don't have best resilience, but certainly back then Cyclone Tracy blew down an entire city. And so we are well aware of this natural variability. And so it's good to remember that that resilience is key to bringing that number down. If you were, Cyclone Tracy was to hit Darwin now, the level of resilience in that community would, you would get nowhere near that number.
That level of damage, or the quantum?
They have changed the way they live and operate up there. So, Tim, did you have any other comment to that?
Sorry, no, I think you got that well, Reece. Thank you.
I might ask the last very quick question. Thank you, Senator Sharma. A recent petition to stop home and car insurance companies overcharging Australians got more than 14,500 signatures and countless comments from people saying that insurance companies were ripping them off and acting as a cartel. Does this level of public distrust bother you? And what can you do about it?
I'm happy. Tim, did you want to take that and then I can comment?
Yeah. Firstly, absolutely concerns us when any one of our customers or the public don't trust us, trust the industry, and that is absolutely a challenge the industry needs to face into. I come back to my point. I do absolutely accept when we're in a hard cycle like we are with both home and motor, where large premium increases are running through as a result of these large loss experiences of both portfolios. It is tough for anyone, regardless of what financial situation you're in, and we are acutely aware of that. Again, our response, particularly on home, is about mitigation, and on a motor is to give people choice, continue to run our business as efficiently as we can, continue to invest in the claims engine so that we deliver a lower cost to repair a vehicle, which will go straight into premiums, continue to run our business with flat costs as we have committed to publicly, delivered on publicly, and that means less expenses we need to pass to a premium. And as I mentioned earlier, we need to do a better job of communicating to customers about how we price and being transparent about the price they're getting.
Okay. Thank you, Mr. Bucket, and thank you, Dr. Whitley. We have put some questions on, you've taken some questions on notice. We might put some more on notice as well, and the return date for answers is the 23rd of August. Thank you very much both for giving evidence today. Really appreciate it.
Thanks for the opportunity.
Okay, great. So I now welcome representatives from RACQ group. Both are here. Okay. Hello, welcome. Mr. Sayers and Mr. Cooney, welcome.
Thank you.
I understand that information on parliamentary privilege and the protection of witnesses giving evidence to the Senate committees has been provided to you. For the Hansard record, will you please state your full names and the capacity in which you appear today?
Trent Sayers, Chief Executive Insurance for RACQ.
Joshua Cooney, General Manager of Advocacy at RACQ.
Thank you. And now, if you'd like to make an opening statement.
Thank you, Chair.
Feel free.
Yeah, thank you, Chair. My name's Trent Sayers. I'm the Chief Executive Insurance at RACQ, a mutual with more than 1.7 million members, and I'm joined today by Joshua Cooney, our General Manager of Advocacy. As a mutual, RACQ exists solely for the benefit of our members and the wider Queensland community. We stand for our members and we are seen and heard in our advocacy efforts each and every day. We also reinvest our profits back into the community. With 2,700 employees and 27 stores, we're really proud of our 119-year heritage, helping Queenslanders in virtually every corner of the state of Queensland. In FY23, we managed more than 170,000 insurance claims and carried out more than 750,000 roadside assistance jobs. We're passionate about making Queensland safer, more resilient and sustainable into the future. Our home state's a wonderful place to live, work and recreate, but it's often synonymous with natural disasters. We believe Queensland's the most vulnerable state in Australia. RACQ Insurance has had more than 50 years' experience responding to and recovering from cyclone, flood, fire, hail and storm. We note the committee is exploring the impact of climate change and the complex factors facing insurance, which is not unique to Australia. Around the world, we are seeing an increasing regularity and intensity of extreme weather events impacting affordability and availability. Last summer, Queensland experienced 7 catastrophic events, including 2 cyclones and 5 storms, including a large hailstorm. RACQ's current claims cost for those events is over $240 million and counting, as the remaining 20% or so of claims progress to completion. This event period followed devastating floods in southeast Queensland and New South Wales in 2022, Australia's costliest event, with an industry loss of over $6 billion across 242,000 claims. There is no doubt that frequency and severity of natural disasters is leading to surging insurance claims. These surges put considerable pressure on insurance premiums and insurance companies, forcing us to reassess our risk models and inevitably our premiums. As the risk of natural disaster grows, insurers adjust their pricing to maintain solvency and sustainability. For some policyholders, unfortunately, this does mean higher costs for coverage. Homeowners in high-risk flood-prone areas, for example, have seen premium increases, making insurance availability a real challenge. However, insurance pricing is complex, with many factors being considered in determining the appropriate premium for the risk, along with affordability for our members. It's been more challenging in recent times, with the high impact of inflationary pressures affecting all sectors of our economy. Record levels of annual inflation, shortage of qualified trades have affected the cost of home repairs, coupled with the impact of significantly rising reinsurance costs for all Australian insurers. Rising reinsurance costs, which take account risk modelling, has been a significant cost driver to insurance premiums over the last 20 years. Juggling the balance between managing the pricing impacts to our members and these factors considered in pricing RACQ recently adopted alternate approaches to how we assess risk-based perils pricing, which influences the way we calculate insurance premiums. These models ensures that we calculate premiums on an individual basis that more accurately determines our members' individual level of risk. Where our view on the risk is higher, members will see this reflected in their premium. However, they will also experience this model in a more favourable way, where our modelling shows the risk is lower. So what can government and industry do about the impact of climate change on insurance premiums? RACQ is a member of the Federal Government Hazards Insurance Partnerships. This is collaborating with the insurance industry to identify high-risk areas around Australia experiencing affordability challenges and implement suitable policy solutions and strategies. Addressing affordability requires a multifaceted approach. Governments, insurers and individuals must work together to mitigate the risk and lessen the impacts. This involves investing in public resilience, private infrastructure, better land use planning so we don't place communities in harm's way, adopting stricter building codes to ensure stronger homes and businesses, and promoting sustainable practices. In addition, RACQ has called on governments to remove the double taxing on insurance where people are paying 10% GST as well as approximately 9% stamp duty. For example, a $3,000 home and contents policy, which is common in many parts of Queensland, means approximately $500 of premium is tax. Finally, our RACQ has supported a well-designed cyclone reinsurance pool on behalf of our members in far north Queensland or in North Queensland. Our recommendations for the pool remain unchanged and include the policy parameter of budget neutrality that was imposed on the pool when it was designed should be challenged, and opportunities for subsidisation of the pool should be explored. The pool should be expanded to at least provide cover for flood caused by cyclone and perhaps consideration on total flood cover. Replacing the existing 48 hours claims period with 7 days like global reinsurance definitions, and expanding the pool to cover motor insurance. In conclusion, the impact of climate risk on insurance premiums and availability is a pressing issue that's affecting many Australians. The interplay of the risk factors determines the affordability and availability of insurance. As climate risks continue to evolve, understanding and addressing these factors becomes even more crucial to ensuring that insurance remains effective in financially protecting our most treasured assets. We welcome the opportunity to discuss this further with you.
Thank you very much, Mr. Sayers. I'll go to you, Senator Sheldon.
Thanks, Chair, and thanks for joining us.
Thank you.
I think it's just almost this afternoon. I just understand that after the 2011 Queensland floods, RACQ made the decision to cover all forms of water damage, including flood and storm, and all their insurance products. Is it correct?
That's correct.
And to avoid the issues we've seen in other insurers that people are claims being rejected based upon the opinion of a hydrologist on where the water was coming from. And I've seen some examples directly in New South Wales, in Eugowra and Western New South Wales, where different hydrologist reports were coming back negatively and positively, depending on which part of even though they're on the same level, and storm damage and even where places were more susceptible from the reports that we saw. So I just got a few questions about that question about why you made that decision. And firstly, why do you think that RACQ has made this decision when some of your competitors have not? What do you think is the basis of the different approach?
I can definitely talk to RACQ's experience in that regard, and our experience where we had flood as an optional cover and the ensuing challenges for our members that caused in those events that you allude to did give rise to us to make an alternate approach. So flood is now standard cover in our policies, so we do not differentiate on that in terms of the policies that we offer. And that decision was largely based on the fact of the experience that we saw in the floods that you referred to and the challenge that created for members. And notwithstanding, you will seek to give full clarity in terms of what cover's being provided at a point in time. The unfortunate reality is that the potential flood impact can be well known, it might not be well known. The prospective risks are always that they're prospective risks that could occur. So we formed a view that that cover as standard was critical in terms of providing the cover our members needed.
And have you done an evaluation, which I suspect you have, on using the old system in comparison with the system that you applied since 2011, about what the risk profile then is?
Yeah, I don't have anything particularly quantitative.
I'm talking about financial risk.
Yeah. I don't have anything particularly quantitative in that regard. We do have examples where some members in lower flood risk areas will be querying why can't they avail themselves of a no flood policy and therefore seek to get some more competitive pricing in that regard. We do constantly monitor the exposure of our portfolio to higher or lower flood risk areas, and we seek to sort of maximise our profile so that we're not overexposed relative to our natural market share to high risk areas. Being a big insurer in the state of Queensland, we will have exposure to high risk areas. It's about managing that concentration so that we don't have an overexposure relative to how our natural market share might roll out.
That market pressure about how you spread risk and how you charge for risk levels.
Spread
the price of risk.
Yeah, absolutely. And there's no question we've had an escalated level of member inquiry in terms of their premium and how their particular property might be deemed from a risk profile perspective.
So just we go back to this question of hydrologists. So by removing the need for hydrologists and other administrative costs associated with those assessments, and the legal costs associated with fighting off complaints about rejected claims, have you done a costing on how much that delivers a cost saving to the RACQ? That aspect of it.
Yeah,
I appreciate you've rightly described other factors when pricing policies, but that particular component.
Yeah, I don't have a particular quantitative assessment of that element in terms of all of that. We do see our typical performance on finalisation rates following events is typically pretty good to industry. And some of that will no doubt be on the basis of the fact that we're not needing to chase hydrologists. We know the damage is covered, so we can get on with it.
I just want to go then. It's probably you have deep interest of the committee about how the pricing of different components. Is there a capacity to actually get that information for us?
Yeah, so we understand, at a portfolio level, the component parts of what drives the key risks that we're needing to price for, and it's typically all about the natural perils that you see in all of that. And we have the ability, where members inquire, to sort of give them a breakdown in that regard. So we can provide some further insight on the key drivers of premium pricing.
Good. So then that would be able to bring sort of those legal costs.
Maybe not to the granularity of legal. Definitely to the peril level, the key perils and the key underlying costs that are driving a premium component. But we'll be able to provide some level of granularity in that regard.
Yeah. Can you do something other than? I appreciate peril risk.
Yeah.
But I'm trying to get a handle on what is some of the cost, the other factors, which then I'll consistently then put on notice to other insurance companies as well to see how they sort of price that.
Happy to take that on notice and see how we can best stratify that insight
and breaking it into that different peril groups.
Yeah. Understood. Thank you.
Thank you, Senator Sheldon. Senator Sharma, Senator McLaughlin.
We've heard this morning from the Local Government Association, and I note in your submission you talk about land use planning. I'm just interested in whether you've formed any views on how we can improve in land use planning. Obviously, we're living with the consequences of past decisions and past development decisions. It was put to us that a council can make a decision, then it can be appealed. So I had a sense of powerlessness from the council, but where do you see the pathway forward?
Yeah, understood. In terms of the detailed machinations of land use planning, I'm not completely across, but particularly as it relates to insurance, if we see an experience evolving or work being done to mitigate loss, and then that equals or rolls into an improved experience, then that is something that we are and we're committed to making sure we take account of in insurance pricing. So whether that be individual property level mitigation that people are doing, whether it be cyclone work or flood mitigation work, we take account of those factors in terms of how we construct premiums and attempt to differentiate premiums as best we can. But then in a holistic level, if an area has better resilience built into it, and the experience is supporting a beneficial outcome as you prospectively look forward, then that is something we take account of in terms of our premium setting.
In new development, let's say in some of these shires that are of interest, is your experience that the council or the developers are consulting the insurance industry or insurers to see that post-build the family dream they're selling is insurable?
Yeah,
is that connection being made?
Yeah, I've not seen a personal experience in that regard. That doesn't mean that might not happen at some other level, but as we seek to geographically assess the risk profile and how we might price, we seek to understand the relative risk of certain areas, elevation of areas, defence works around that area, so that you can come to an assessment of that risk profile. But I'm not aware of any other sort of proactive approach in that regard.
Just one on around transparency. There's some frustrations being expressed this morning and submissions about not understanding pricing, and I know pricing is complex and multifaceted. Do you have any thoughts on how we can bring improve the communication between the stakeholder groups?
Yeah, fair question. We, in line with industry and other regulatory overlays, now have renewal year-on comparisons to prior renewals and dollar disclosure in the renewals and those sorts of elements as well. We get, I wouldn't say relative to the size of our portfolio, a majority of members seeking to question a component breakdown, but we do get some members seeking that. And when they engage with us, we have the ability to run them through the component parts and what's shifted year on year for them and why that is driving a premium, and then similarly what we can do to mitigate those increases. So we typically find at that one-on-one engagement that we have the ability to actually get into a more detailed conversation about someone's individual risk address.
Are you experiencing, this is my last question, Chair, experiencing, for example, engagement, just on the engagement piece, communication piece, by architects on new homes? Is that something you're experiencing within the industry, or are they still building and not reflecting on the consequences?
Not at a transactional. I'm unaware at a more macro level, but I'm not seeing that.
And micro.
So I'm not seeing that sort of interaction transactionally. To if I do this, what would the impact be to my insurance policy?
Thank you.
Senator Sharma.
Thank you. I just wanted to go to your opening remarks, if I could, about the contribution of tax to the insurance premium. So you said, I think you cited a $3,000 home and contents policy, for instance, in Queensland. You said about $600 of that would be tax, state and federal? $500. Yeah. So what's the GST is 10% and the Queensland stamp duty is?
Yeah, if I may, Senator. So we are seeing a double taxation on insurance in Queensland. Of course, you've got your 10% GST, but in Queensland we have a 9% duty on insurance as well, and it compounds onto the GST component. So you're effectively seeing 19.9%, not 19.9% tax because the duty is added after the GST is applied. It is a cost burden, and we're seeing generate a fairly significant revenue base for the Queensland government.
Obviously, so because it's a percentage tax, if the insurance premium goes up because of cost of underwriting, it's not a flat fee, right?
It's not. Correct.
Okay, so it's a growing stream of
It
revenue.
compounds. Yeah.
We've been pretty vocal on this issue. We've talked about it in a lot of submissions. It's currently in our Queensland elections document. We'll continue to campaign on it because we think it's for its abolition. If governments won't remove stamp duty, they should at least consider reducing it, or if they wouldn't reduce it, perhaps spend it where they collect it. So if you're collecting this revenue, it's significant revenue. It earns about $1.5 billion a year in Queensland. Why not invest that stamp duty revenue into risk-reducing infrastructure and investment? Yes.
And I understand, I don't know if you operate in New South Wales, but the New South Wales government recently, I think, committed to abolishing what was called the Emergency Services Levy, which was I think it was a tax of about 15% impost, roughly speaking, on insurance premiums. Were you part of the advocacy for that? Are you in the New South Wales market or not?
We're predominantly Queensland, but we do have some risk exposure in northern New South Wales, but only a very small amount that just creeps over the border, and not directly involved in that New South Wales advocacy, but broadly, as Josh alluded to, whether it be the emergency services levies or the stamp duty, we have a very forward position on that's not the efficient way to sort of collect those levies.
Yeah, okay. And then just finally, so I think the Insurance Council of Australia in their submission cited sort of 4 different factors that have been driving up insurance premiums, and I just wanted to check this was roughly, this is how you see it. So I think they cited the impact of extreme weather events, growing asset values in high-risk areas, higher inflation, and then rising global reinsurance premiums. I mean, is that basically what you see as the contributors to increased costs? That
broadly correlates. The frequency and severity of natural weather events, particularly in more recent times, is definitely impact. The broader supply chain challenges that you've seen in conjunction with those big events and then flooding the market with a whole lot of activity. Reinsurance response to all of that, so reinsurers own excess or retention on their policies, and then the cost to do that. All the aligned factors at play.
What have you seen? I think we had a figure before, I think it was a 47% figure, but I need to check about increase in sort of global reinsurance costs. So what have you seen at RACQ in terms of how much global reinsurance?
Don't have an exact number for you, but it is a significant increase that we've seen, and as significant has been what we retain as our own losses.
As your own buffer against your contingency.
Yeah, correct. So that's been, that's more than tripled in the last sort of 6 years for us, what we retain.
And is that your own
first loss?
Like internal prudential requirement, or has that been imposed by the regulator?
Your attachment point or retention or your excess on my reinsurance policy, for want of a better word, not a regulated element. Okay. It's a market condition. So what can you actually buy at an appropriate price? What cover can you purchase at an appropriate price?
Okay, and it's true to say that the entirety of the Australian insurance market is dependent upon global reinsurance, offshore reinsurance players.
Yeah, very true.
Right. Okay. All right. Thank you, Chair.
Thank you, Senator Sharma. I must say it was very refreshing to hear that RACQ is doing assessments at individual property levels, because we heard all day yesterday how that was a big problem, and whole suburbs, whole postcodes were being assessed on the same risk, and that was causing huge issues. I also know that you are committed to greater pricing transparency as well for members by, I think you display the total premium from a customer's last insurance period alongside the total premium for the upcoming insurance term. Is this a practice you think others should also adopt? Because we have been hearing so much about more transparency and accountability, and why, if you have an view of why others don't, that'd be good to hear.
Challenging for me to comment on how others might tackle it, but
it should be available.
I think that transparency is key, and then by providing that insight, which can be difficult at times, because over over a renewal period, lots of things can change. Someone's level of cover might go up, or they're changing a vehicle on the policy and all those sorts of things. But as best you can, that comparison is handy for our members. And then that then elicits the contact where we can get into more detail and work through what an individual member's issues are and what we might be able to do to support them.
Great. You were here, I think, when I was asking Suncorp about the park homeowners who we heard from yesterday, and they had been insured by CIL after the floods. They were paid pretty quickly compared to others, but CIL refused to insure them, as did many other companies. And they said RACQ was the only company that insured them, and I think 10% of them are insured. Is that because of the standard flood cover you were saying you have, or what was the reason why that you could insure them?
That individual example I'm unaware of, I'm sorry, but we do provide both caravan cover and cover for caravans that are on site under our on-site caravans under our home insurance policy, and then obviously mobile caravans under the caravan policy. So we will look to treat an on-site caravan within the context of our same underwriting rules as a house and issue a home policy on a permanent on-site. So they would fall into the same assessment like a home, and we would seek to assess the risk relative to their area and the type of dwelling that they would have.
When you were talking earlier to Senator Sharma about stamp duty, I just want to clarify there was stamp duty on general insurance premiums we were talking about. Were you saying that should be collected and used for mitigation?
Correct.
Okay, because some others have suggested that it should just be abolished. And some have said it wouldn't make much of a difference. Others have said it would make a huge difference.
That would be our first preference, is just to remove it. It's a very inefficient tax. It's a disincentive to protecting, fully protecting your asset.
It's
that
inefficient.
Would be our first preference, Senator.
And would it make a bit of a difference to people's premiums as well? Or what's your view on that? Some said it would be peanuts. Others said no, it could be pretty big.
Well, I think our example, like on a $3,000 premium, home and contents, which is not uncommon across Queensland. It's in that vicinity of $500 of that premium is tax related. So if that wasn't there, that would be a significant reduction.
And especially in the cost of living crisis, that would make a big difference.
Yeah.
So climate, I guess we all know this. Climate-driven disasters are becoming more intense, and we have seen that over recent years, and that will keep happening unless we take some strong action to tackle it. And you have provided some good, I guess, longish term, I'm thinking measures, medium to long-term measures to kind of address those issues, and also then impact on the insurance premiums. I'm just wondering, in the shorter term, we know that government does have this reinsurance pool for cyclone risk, and it reduces the cost of reinsurance, and hence the aim is to reduce the cost of premiums. Is that something the federal government should step in and do now? Because people are really suffering, and this isn't likely to end very soon.
I think broadly, we have had, as I heard, some previous evidence around a hardening cycle. I am seeing some signs in terms of what our prospective view is on premium rate rises against the backdrop of most recent reinsurance renewals, some stabilisation in inflation. I'm hopeful we're not going to see the similar inflationary pressure on insurance pricing as we move forward into FY25 as we have had in most recent couple of years. The reinsurance pool, cyclone reinsurance pool in North Queensland is one we advocated strongly for. We still don't think it's gone far enough. We have passed on all the savings that we manifested as a result of participating in that pool to members. The unfortunate reality in some situations is the other factors, inflationary factors, overtook some of those savings that were gleaned on the back of the cyclone pool. So a lot of that needs to rebalance and settle down before you actually see some real year-on-year dollar savings versus a dollar saving of a component part of how premiums built up.
But it could work if it was expanded to take on flood risks. And
Yeah, flood risks and the subsidisation potentially and those elements.
Yeah. I want to talk about polluter pays principle, and I guess who pays for the cost of all of this. And we're saying, well, government should put something in, and individuals are paying as well. The state of Vermont recently put in place laws in the US, where big oil companies who are big emitters have to put in some money for the damage that is caused by climate-driven disasters. I just wanted to get your view on that.
RSEQ wouldn't have a position on that particular proposition, Chair. Yes, we are calling for greater investment, much needed investment around the built environment, constructing risk-reducing infrastructure such as flood levees, risk-reducing home programs like what we're seeing in Queensland and New South Wales. But where that investment is derived from, we wouldn't have a particular position on that.
And would you have a position on acting more strongly on actually what is causing all of this, that is the climate crisis?
We are supporters and we're adopters of the ICA's climate change net zero roadmap. We're committed to doing what we can in terms of reducing our footprint and reducing our own emissions, yes.
Okay. Unless anyone has any more questions, we thank you both very much for coming today and providing this excellent evidence. Thank you very much. And there are some questions on notice. We will provide them to you, and answers would be required by 23rd of August. Thank you very much. And now the committee will suspend until 1:30.
Thank you.
Thank you. Fitze. Thank you. Welcome both. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, will you please state your full names and the capacity in which you appear today? Start with you, Ms. Fitze.
Hi, I'm from Tenants Queensland. My name is Ms. Kuzakwasha Abigail Fitze, and I'm here to speak on behalf of tenants in regards to this matter.
And my name is Paul Holmes. I'm here representing Legal Aid Queensland as the Director of Disaster Relief.
Thank you. And now I invite Ms. Fitze to make a short opening statement.
So thank you so much for the opportunity to appear before the committee today. Tenants Queensland greatly appreciates this opportunity to speak on the impact of climate change on insurance premiums and the roll-on effect this has on tenants. Tenants Queensland is a statewide community and legal service providing advice to tenants. Tenants Queensland aims to protect and improve the rights of all people who rent homes in Queensland. Our clients include renters in the private market, social housing, caravan parks and boarding houses. About 1 in 3 Queensland householders are tenants. This number is increasing as home ownership becomes less and less affordable. The current rental market is characterised by instability, insecurity and a lack of adequate protection for renters. A portion of Tenants Queensland's work involves assisting tenants impacted by floods and other environmental disasters. In response to the 2022 February flood and storm event, Tenants Queensland established the Flood Recovery Team, which now includes 2 dedicated flood recovery solicitors. So often discussions about home insurance often focus on homeowners. However, it is evident in the work I do that there are devastating consequences for tenants who are impacted by climate-driven disasters and for one reason or another have not had insurance to recoup their losses, replace their belongings or secure alternate accommodation after disaster. In the course of our work, we have come across 3 main concerns for tenants. The first is the high premiums set by insurers for individuals living in regions deemed to be prone to climate-driven disasters. For tenants, contents insurance serves as a means of mitigating their losses following climate-driven disasters, especially as lessors are not responsible for replacing their belongings unless there has been a breach of agreement. Most tenants who have no choice but to continue living in disaster-prone areas due to low vacancy rates would be willing to pay a reasonable amount in exchange for the security of knowing that should another disaster occur, they would not have to worry about replacing their belongings. However, the increasing early premiums mean that these tenants who are most at risk of climate-driven disasters are forced to forego insurance or select the belongings that would be hardest to replace, thereby underinsuring themselves and exacerbating the hardship already brought on by climate-driven disasters. Increasing premiums in areas prone to climate-driven disasters also impact lessors' home insurance, and often these costs are passed on to tenants in the way of excessive rent increases. This means that tenants are often footing the bill for landlords' insurance that cannot be used for their benefit in the event of a disaster, while also having to forego insurance for themselves or settling for underinsuring their own belongings. Ultimately, while tenants and lessors alike in disaster-prone areas are impacted by increasing premiums, the cost is much greater for tenants who have no means of recouping these costs from elsewhere. Another issue and another concern for tenants in regions considered disaster-prone who were deemed ineligible for insurance. Recently, a tenant reached out to Tenants Queensland after signing his lease agreement to ask if we could assist him with finding an insurer that would provide him with insurance cover. The tenant had not been made aware that the home he was renting was considered to be in a flood-prone area, and he only realised this when every insurer he reached out to refused to provide him with contents insurance. The tenant was not made aware because tenancy laws in Queensland do not require lessors or agents to disclose that rental premises have been flood affected, and tenants will often find out when it is too late that not only are they at risk of flooding or any other disaster, but they will also be uninsured for the duration of their lease agreement. Tenants do want to insure their belongings, and while it would be easy to suggest that tenants simply do their own research before entering into agreements, this belies the issues that are intrinsic for tenants in these situations. These include the desperation tenants often feel to accept lease agreements as soon as possible after they've been offered to them due to low vacancy rates. Tenants are also often unaware that insurers can redline whole postcodes and regions, even those that are simply in proximity of disaster-prone areas. The third and final concern is that as a result of unaffordability or unavailability of contents insurance, tenants are also excluded from the temporary accommodation benefit. Lessors in Queensland have the discretion of offering temporary accommodation to tenants when the premises are damaged premises are damaged due to a disaster, but there's no requirement in tenancy law to offer it every time. And when tenants are excluded from getting insurance or are priced out of purchasing insurance, they also lose out on being able to exercise their option to have a roof over their head when a disaster occurs. Many tenants who access our service following disasters have had to live in unsafe conditions because they have nowhere to go after a disaster. Others are forced to rely on crisis accommodation because they cannot afford to pay for temporary accommodation until repairs are done to the rental premises. Most of them will also likely be unable to purchase insurance in the coming years due to the unpredictability of climate change, which would mean that they're ineligible for insurance. Tenants are already a vulnerable population, and the impact of climate risk on insurance availability and affordability places them at a further disadvantage. We need insurance to be an option for all tenants, and what that looks like is providing concessions for people who are at greater risk of experiencing climate-driven disasters so they can afford the increasing premiums. And also, it'd be great if there were regulations created that prevent the insurance sector from choosing to avoid insurance for individuals in regions prone to disasters. We also need the government to implement disaster mitigation measures and then informing insurance companies of these measures and then requiring insurers to reassess the cost and availability of insurance for tenants as a result of these measures. Thank you so much.
Thank you so much, Ms. Fitzgerald. If I could go to you, Mr. Holmes, if you could, I'd invite you to make an opening statement before I open up for questions.
Thank you, Madam Chair. So Legal Aid Queensland has been responding to disasters in Queensland for over the past 2 decades, and more recently we've set up what's a disaster legal help program, and that tries to open up as many ways as possible for a disaster affected person to seek help. So for example, there is a priority phone line that people can ring, which is answered immediately by our contact centre. We're also heavily involved in local Facebook groups whereby we will post legal information and in some cases advice through that local community Facebook group or refer them into advice with us. Thirdly, we are regular attendees at community meetings and insurance council forums. So the Insurance Council in disaster areas will arrange community meetings and forums. It's usually every 2 to 3 months. And we attend as an independent person to provide legal advice in those circumstances. The next round of those is coming up in early September, both in North Queensland and in Tamborine and surrounding areas of the Gold Coast. The other thing, in addition to providing legal advice and casework assistance, is that we provide a lot of community education as part of ensuring that people access their rights following a disaster. And I think an important point to make at this point is we're not just talking about homeowners here, we're not just talking about renters. It's also important to talk about farmers in this space and also small business owners, who both groups are equally and often as badly affected as homeowners and contents owners following disasters. In terms of the other thing we do is we've developed what I would call a very good relationship with the insurers and the Insurance Council. And our theory behind that is not everybody will get to us for advice. So if we can identify things like systemic issues, or it might be somebody in a call centre with an insurer who's just got the wrong end of the stick, rather than that taking months to resolve, if we can raise it through an appropriate channel and get that fixed, that's in the interest particularly of the consumer to have their case fixed sooner rather than later, because as we all know, following disasters, one of the big things is the effect that has on people's mental health. The fact that they're out of their usual community, out of their usual home, and I've seen it, that takes a big toll on people. So anything we can do to what I call resolve the ones that shouldn't get to dispute resolution, shouldn't get to AFCA and shouldn't get to court, the earlier we can do that, the better. In terms of the big issues that we see, in terms of climate risk and insurance, the reality is poor people pay more. And I think the phrase that's been coined is the poverty premium, and the reality of it, and particularly low income, particularly rural areas and particularly regional areas, ends up paying more for disasters. And that's not a good thing, because they're the ones who can least afford to bear that cost. And that feeds in nicely to the idea that for a section of our community, insurance is unaffordable. The insurers have started calling it a protection gap, but I'm going to call it what it is. It's insurance is unaffordable, because that highlights what we're talking about here and highlights and puts the human at the centre of this. And when you can't afford insurance, you are at grave risk of your life being upended and in some cases destroyed by a disaster. And we have seen, I think the highest 12-month insurance premium I've seen quoted is $60,000 for 12 months. And I don't know about anybody else in this room, I certainly can't afford that. And the reality of that is that's in a disaster-prone area. And more often than not, with the exception of a couple of suburbs in Brisbane, the disaster-prone areas are highlighted by people who are on lower incomes. They might be in insecure housing, and so they're the ones that can least afford that premium. But in a housing crisis, which is what we've all got, they often have no choice. And while I love the idea of a buyback scheme, and that's been implemented really well in Queensland, the other reality of that is you're taking a whole heap of housing stock out of the system, and those people, although they're being very nicely compensated, may still struggle to find appropriate accommodation. The second thing I'd highlight there is around unavailability. And this is something I'm fearful of is going to get worse and worse. Already we are seeing some insurers reluctant to offer insurance products in North Queensland because of the danger not only of floods but of also cyclones and in some cases bushfires. But there's another problem there, and it happened as early as 2012. Suncorp refused to insure or write new policies in Emerald and Roma until there was a levy built around the towns. And once that levy was built, then they started offering those products again. And I would argue that's 12 years ago, before I think we all understood the seriousness of the climate risk that we're now facing. So I can see that happening more and more as this happens. And I think that highlights the importance that there's no one solution to this problem. It's a combination of the insurers addressing this problem. It's a combination of the government getting involved, as they have with the Northern Insurance Pool. It's a combination of helping fund mitigation measures that reduce the risk. And it's by the combination of all of these things we can start to address it. If we only look at one of these things in isolation, we might go, oh, that's not working. But it's when you do all of those things and look at the combination of all of those things, then you start to see that a difference can be made.
Thank you very much. It is indeed very dire. The situation is really dire. We've just come yesterday from Northern Rivers and we've heard some horror stories.
Some horrible stories down there.
Thank you. I might start off with Senator Sheldon then for questions.
Good, thanks very much. And again, thank you for joining us this afternoon. And Mr. Holmes, I think the point about, I'd add quite a few more things about what the impacts are and about getting this right. I think from the point you made about socioeconomic rights, I'd go to areas of employment. I go through there's a whole raft of interrelated
Absolutely
issues.
There is.
So I'm not taking away from that subject, because I think that what you've raised is pertinent and appropriate. But looking through the lens of insurance and how that is impacted in those spaces is helpful for the inquiry, because I'm very mindful of your broader comments. Now, on looking at some of the insurance questions and some of the broader pieces that we've been hearing over the last number of days, we heard that, and you may have, because of the work, obviously the work you do, and thankfully there's organisations like yourselves that are there. We've heard that through the last 2 days about the issues of policyholders have run into with hydrologists and other expert reports, and the inequality in access to these experts that exists between policyholders and insurers. Can you just give us a view on that issue, and is there any potential solutions out there that you see?
Sure. So that's certainly an issue we see on a regular basis, because the reality is there's a shortage of experts and they're very expensive, and nearly all of them have extensive relationships with the insurers, which makes sense because that's who gives them their work. Does that put at risk people's confidence in those reports? Yes, it does. And one of those things that we have raised with the insurers is those reports often do not do the job they're supposed to be doing. And that is, you'll get a report that says, oh, there might be a screw, and I've seen this, there might be a screw missing in the roof, therefore the property hasn't been maintained properly. Not acknowledging that, for example, in a cyclone, one screw loose is making absolutely no difference at all to the end outcome, and they should be paying. But people don't have the confidence to challenge it unless they get to one or both of us. In terms of a potential solution, and I think from memory we made this submission to the flood inquiry about this, already existing in Queensland, there's the civil law legal aid scheme, which is funded by the public trustee and administered by legal aid, where for things like personal injury or in some cases wills and estates matters, if somebody would not be able to afford to buy the appropriate or purchase the appropriate expert reports that they need for that medical type argument, they can apply to the scheme, have that funded, and then when their claim is successful, that money is paid back to the scheme as part of the settlement. And although the exact same scheme might not work in this space, we think a variation on that has the potential to work and allow people to access those reports that they would not otherwise have accessed.
Thank you for that. I just want to also go to your views on the programs and maybe Ms. Fizz, isn't it? Fizette. Yeah. Thank you, Fizette. Thank you. Just your views on the Resilient Homes Fund or the Household Resilience Program and about how that's functioning. And there has been some, we know that there has been some observations about reducing premiums. I just wondering if you might just go through what your observations are in that space, and I'll over to you.
You can go first.
Okay, sure. So in terms of reducing premiums, one of the things we've been arguing for some time is that there needs to be more information on the insurance renewal you get, which breaks down exactly what the cost of your insurance is actually made up of. Because I think people, if they see that taking resilience measures to improve the safety and the security of their home will make a difference to the premium they're paying and it's cost effective for them, they're likely to take it. If they can see that on doing so, those premiums are reduced. And from talking to the insurers, in theory that would happen, but if you're not giving people a signal that it will make a difference, how are they going to know that they need to do it? And how are they going to know that it's going to be financially worthwhile for them doing it? And in that space, there's probably also a role for government, like they are to some extent, in providing some financial assistance to people who might not be able to afford to do that, to take on those resilient measures, because ultimately that's not only in the customer's interest, that's also in the government's interest, because the reality is when somebody's not insured, the government becomes their de facto insurer and becomes their de facto insurer to help them get back on track. So anything in that space that means they're able to both save the government money and get people's lives back on track quicker is a good thing. On the Resilient Homes Fund, my impression is on the whole that's worked very well, particularly given it was a scheme set up from scratch for the first time in Queensland. It did, obviously, when you're setting something up, take a few months to get up and going, as we all would have liked. But I think the biggest criticism I've heard about it is there hasn't been enough money to buy back enough houses. Because one of the things in Queensland is there's a lot of places in flood and disaster-prone areas who would benefit from being bought back as part of the scheme, and there's just simply not been enough money to do it. So anything, and I believe the plan is to keep that scheme ongoing, to continue to help Queenslanders in that respect.
Just before we move over, and just that point you were making earlier about the buybacks, and I take this as anecdotal from you rather than statistical or research, but how that was affecting the housing stock as well. So there's a chicken and egg sort of question.
There is a check. Yeah, there is a check. It's anecdotal, and it's anecdotal in the sense that those areas are areas which are of lower cost already when it comes to housing stock, and there's not a lot of low-cost housing stock to begin with, and so even when you're getting compensated for that, finding appropriate accommodation when there's already not much low housing stock can be difficult.
Yeah, thank you.
Sorry, could you restate the question, Mr. Sheldon? Sorry.
Yeah, well, just this question about the reducing of what we do about premiums with some of the changes that we're making, and the housing resilience program. So there's the household resilience program, the Resilient Homes Fund, which improves the resilience of the home and how that impacts positively on insurance, etc.
Yeah, I think what I stated before, I think it would help a lot in the sense that it would mean that potentially tenants are then essentially maybe given an option to then purchase contents insurance, because potentially, if they're living in a disaster-prone area, then maybe they've actually been removed as being one of the homes that are maybe where it's going to be unavailable or ineligible because, they're disaster prone. So that might actually help them in the long term, in that it actually means that they're able to kind of get back into the space of being able to actually purchase contents insurance. Once, of course, insurers are happy to acknowledge that those measures have been taken, and therefore, they're happy to kind of cover tenants. So yeah, I think it would go a long way for sure. Yeah.
Also, when one of your colleagues, Ms Webster, appeared in the House Economics Inquiry into insurers' responses to the 2022 floods earlier this year, she mentioned that some insurers require that tenants are evicted from damaged homes before they will carry out any works, even when both the landlord and the tenant want the lease to continue. Is that something you've seen as well? And what's the justification given for that?
Yeah, so just recently, actually, I've had a tenant had to leave her home, and the reason is generally that they consider it unsafe for the tenant or anyone to remain in the home while those works are done. And so essentially for the landlord, they need to see a notice to leave or a notice of intention to leave given by the tenant in order to say that there is no one definitely living at the premises and therefore work can actually continue. So I guess it's kind of a security for them, for the insurer to know that for sure there's no one living at the premises while these works are being done. It's just unfortunate because that does put tenants in a very precarious situation because, they've given a notice of intention to leave. Who's to say they can then return, later? Where normally, when repairs are being done, you might maybe have to leave for a duration, but this might mean a permanent move that you might not be able to take back,
So in that case, what are some of the recommendations you might see would be helpful in those circumstances? I might also ask the same question of Mr Holmes as a follow-up.
Well, I mean, I think it's interesting that obviously, the Resilience Homes Fund gives money to the landlord. It doesn't consider situations where the tenant is actually living there. And so maybe it might be worth it for them to include a sum of some sort so that the tenant can actually leave. And then maybe part of that is maybe creating an agreement that states that it's for a particular time and that they will eventually come back. Because I think a bigger issue as well is that there's no clarity about how long the tenant has to leave for. They're just told to go. And so, trying to find accommodation is really difficult. Are you going for 3 months? Are you going for a month? How long is this work going to take? And, where do you go as well during that time when there's nowhere really to go?
It improves that communication between the landlord and the tenant, which I suspect,
exactly.
I can say from my personal experience,
yeah,
and family experience, can be one of the biggest challenges.
Exactly, and these are people with children, with their children that are close to their schools. How long can they leave that particular area or that home? They need that surety to know that they will come back and when they will come back. So yeah, I do agree. It would definitely help the communication between the two parties, yeah.
Mr Holmes?
I would support what's just been said, and I'd also say that it may also improve what I would call what can be fluid deadlines about the repairs with the insurers, because one of the issues that pops up is you might have it'll be finished by May, and then it'll get extended to June, it'll get extended to September, it's extended to October as part of the repairs, which I think complicates that issue. But if you had both the tenancy law and insurance law working a bit more in concert rather than on two parallel streams by doing what's been suggested, that could address not only the tenancy issue, but it could also address the fact that there are ridiculously long blowouts in what it takes to do some of this work.
No, thank you for that. That's very thoughtful. If I've got time, I'll come back and ask some questions.
Great. Thanks, Senator Sheldon. Senator Sharma or Senator McLaughlin?
Yes, I'll just come back to the point which interests me about informed decision making, both for renovation or a new purchase. We've heard a lot about those that are trapped into a cycle, but I'm interested in teasing out some of the issues for someone looking to purchase.
Yep.
It seems to me if you're looking to purchase or renovate, unless you're very well resourced to tease out all the information, you could end up renovating and spending unnecessary money or money ill spent on something that mitigates.
Yep.
And similarly, I'm just wondering, in respect from your perspective, if I'm looking to buy into a new suburb, how do I know? I mean, it's been suggested councils didn't know at the time for some of these, but some of them are in floodplains, and been so since the 70s. How, just looking to the going forward, do you have any perspective on that?
Look,
or what should be in place? Where would I go?
Yeah, and look, I think it's a really important point to discuss, because one of the things, and I'll go back to 2011 in Brisbane, when most of Brisbane went underwater, the story that came out was either people were from an older generation that believed the myth that we had Ivanhoe, Brisbane's never flooding again, or they were from the generation that's never actually experienced a disaster, and so it didn't even enter their thinking. So I'm hoping, although it's terrible, the recent events are starting to change that and getting people's brains around the idea these are questions they have to ask. If they were asking them, the sorts of things I would be doing personally, and I did this when I purchased my house, you go to the local council and check the flood maps, because despite any arguments about not knowing, there's a housing development near me that was built on what was used to be a water park, and there was a reason it was a water park, and it's because it goes under in a mild shower. But so you've got the ability to go to council, you've got the ability to go to local government, and I actually think there's some insurers I'd be ringing up and going, I'm looking at buying this property, would you insure it? Because some of the data that some of those insurers have, I actually think is better than some of the data the government has, because they've spent a fair bit of money in actually going into that detail. And if I'm ringing up and the insurer says I'm not insuring a property, or I'm insuring it for 60 grand a year and that's the only way we're giving you a policy, I'm starting to ask serious questions about whether or not I should be buying it. Because I'm actually fearful that one day we'll get to the stage that we're at, I believe in Florida, where banks aren't even writing mortgages, let alone insurance policies for some areas of Florida, because they're so prone to disasters. So in answer to your question, in short, I'm going to the council, I'm going to insurers, and I'm going to the local neighbourhood centres and asking questions.
As you've rightly pointed out, there's pressure on increasing house stocks.
Yep.
With pressure on increasing house stocks, there's pressure on using land that's close to public facilities.
Yes.
This is maybe you can challenge that. Then there's going to be pressure on building in places which may not be wise.
Yep.
So that says to me there's a role in government somewhere. I'm not an expert in Queensland development law, I'm a South Australian. Yep. Has it, in your perspective, a lack of resolve to what we were told this morning, the council make decisions, it's appealed. Is it a case there's some argument for federal government intervention to keep those, to think about places that should be left alone, or
Look,
you see the chicken and egg argument
Yeah.
that's being teased out over these hearings. You either don't build in the place, or you do build in the place and you inform consent.
Informed consent, or you build it in a way where it's going to be the least possibly affected.
Yeah.
Like there are places, and I'll use Oxley as an example, in the western suburbs of Brisbane, where there are now houses which are literally on, I reckon, 15-foot high stilts, because the largest flood that's come through there went through at about 12 feet. And I won't have those figures exactly right,
Yes.
but you get the idea. And the theory is, by building that high, all you've got to do is hose out the underneath bit after the water goes through, and then you're right to start living there again. And that was the original concept, believe it or not, behind the Queenslanders. The idea was the water would wash underneath the house because the area flooded so often. But then we started building them in, and that's what's caused part of the problem in that space. So I think it's a combination of everybody needing to be involved in that space, because when you leave it to one, whether it be the community, whether it be a government organisation, whether it be the federal government, you often don't get to the right result. But when you have more brains involved, you do.
No, thank you. Left to you, Chair.
Thank you, Senator Doctor. Quite a few of the people we've been speaking to have said that the most stressful experience after the 2022 floods was dealing with insurance companies. And the House of Representatives' inquiry into insurers' responses to the 2022 flood has also been told the same stories. I'm just wondering if that's something that you have heard, Mr. Holmes, given also that you said you go to these meetings between insurers and people who are insured. What happens at that meetings? Have the level of complaints or frustration with insurance companies increased after these climate-driven disasters?
Yeah, look, I've been in this space 16 years, so I've seen a lot of disasters in that time. I actually think the frustration is still there and quite large, but it's actually not as bad as it used to be. There were community meetings in 2011 where we were there till 2 and 3 a.m. Dealing with people and helping them through. What tends to happen these days is somebody will walk in the room and they might go across to the insurer, and if they're not satisfied with the insurer, they'll come to ask for advice.
Then all the process.
And we will often walk them back across the room and sit with them while they're talking to the insurer. I tend to find the thing that goes most wrong with insurers following claims is they mess up the communication bit. And it's often they mess it up at the first phone call or the first interaction. I've lost count of the amount of people that have come to me and said, I've called the insurer 12 times and they've called me back once. And as you would know, when people are under stress and they've experienced trauma, if nobody's calling them back, their immediate reaction is, oh, they must be withholding terrible news from me. And it's often that they're not withholding terrible news, it's often that they're just really bad at returning calls. And as soon as you break that trust, it's gone and it's almost impossible to get it back. And part of our role is often not dealing with the really tricky legal issues. It's actually rebuilding that trust and rebuilding that bridge and being a bit of a conduit to see if you can get to a resolution that helps that consumer as soon as you possibly can. The second part of what they find really hard to deal with is I really hate maintenance clauses. I reckon a third of all refusals I see following a disaster are based on a lack of maintenance or not properly maintaining a property. And those reports routinely do not say, and I'd love them to say, there was a lack of maintenance in this property. As a result of this specific lack of maintenance, it meant that the storm, which wouldn't have damaged the property, in fact did. If they did that, I'd be fair enough. I think I've seen that done well once in the last 3 or 4 years. And when that's not done well, again, that trust is broken. Because people reasonably say, if there was a storm through 3 weeks ago and my house didn't leak, my roof's in good shape. But then when a tornado comes through and it rips off the house and the insurer goes, you didn't maintain the property, consumers rightfully go, that makes no sense at all.
Because it doesn't.
Yeah,
It
exactly.
doesn't, yeah. Insurance, and we heard this morning that in Merway, I think it was the mayor of Merway was here this morning and telling us that insurance is more expensive than mortgage in certain cases in that area. You know, and also the other thing about mortgage is that the requirement to get a mortgage, like insurance is becoming a key requirement, or is a key, and that is also, I guess, making more and more homes become uninsurable in that sense as well. What are you seeing amongst your clients on the impact or the ability to maintain mortgages on top of ever increasing insurance, and also are people selling their homes because of that?
Okay. So I guess the first point to make is and I've never asked people specifically, but there are a lot of people out there who are in breach of their mortgage because they don't have insurance, because they can't afford it. Mercifully, my impression is there's no bank actively going and finding that information and acting on that. So credit to the banks in that respect for not doing so. The reality of selling is people are paying literally all of their money to the mortgage because of the fact that there's no rental stock. Back about 5 or 6 years ago, if somebody was behind on the mortgage, our advice would have been sell up, get your equity out of the property and go and rent somewhere. We've stopped saying that because there is nowhere to rent. On the idea of financial hardship and paying the mortgage, we are seeing a big increase in people not paying their rates and a big increase in people not paying their body corporate fees because they are mistakenly paying their mortgage at the cost of all else, not understanding that you can just as easily lose your house through unpaid council rates and unpaid body corporate, probably more easily than you can by not paying your mortgage. But also in the last month or two, we're now starting to see the mortgage arrears and people actually being evicted from their homes. And sadly, in some cases, they're now living in their cars. And that's the tragic outcome from all of this.
I mean, it is exacerbating everything, really. And if I could go to you, Ms. Fitze, we were talking about rental, people who are renting homes or apartments earlier. And yesterday, we did hear a terrible story of, of a tenant who had to leave their home after flood damage. The landlord was overseas. The house was destroyed. And I think the landlord did nothing, is what we heard, and the tenants had to evacuate and find temporary housing. But they ended up moving like a staggering 16 times in 1 year. So basically it upended their life, pretty much lives, job connections, whatever. So I'm just wondering, I mean, obviously because that area was hit so hard, there probably were many homes, there were many, not probably, many homes destroyed. But there are, as you said, there are no rentals. So is this very closely interlinked, like, I guess more and more of these disasters happening interlinked with the climate crisis, with the housing crisis?
Yeah.
And that really needs to be urgently addressed.
Definitely. It's tied together because tenants are the most vulnerable. And so for them, that home is their home. And so if that home's not fixed up, then they need to find somewhere else to go. But if they've got nowhere else to go, then it's now leaning on government resources, which sometimes aren't there because already there is a shortage in housing anyway, and so, it matters a lot when, their homes aren't fixed, for whatever reason, the insurer maybe, has taken their time or they're so busy, there's not enough tradespeople, all those different issues. And then ultimately they're out, and they're considered, they might be out within a day because the home is considered non-livable, which under tenancy law, you can give almost immediate notice, and they're out maybe with, again, their family, and then they've got nowhere to go, and it just creates just such a terrible situation because not only have you potentially lost your belongings, but you've got nowhere to go and you've got to start over. And so for people in lower socioeconomic backgrounds, that's devastating. Even the grants that come through afterwards are often not enough to recoup all those losses that you might have experienced, like considering white goods, for example. How are you going to start replacing, fridge when you need to just find somewhere to go, and you're trying to pay for that in itself, you know. So yeah, it's completely devastating when that kind of thing happens. Yeah, and yeah. Yeah.
Mr. Holmes, you were saying earlier that 2011 floods, one of the I guess it is an advantage that people's knowledge of floods improved because many of them had not seen a flood in their lifetime. But I guess what could be done better for newcomers in the area or renters, I say particularly, because you were saying they don't even know that the place they're renting is prone to a flood, right? The laws obviously need to change. But what more can be done to make people more aware of flooding when they move into the area from somewhere else?
Yeah. And I think it's not just flooding, it's
other disasters.
Bushfires,
Absolutely.
It's all of those things. And I think one of the important things is around property law, as I think both of you have identified, is this idea that on buying a property, there's got to be some duty to disclose.
And renting
and
as
likewise with renting. You've got to, if that property's been affected, whether it be by flood, bushfire, cyclone, etc., there's got to be some duty to say this property was affected up to whatever height in whatever year, and the following rectification works were done to it. Because that at least gives people the opportunity, as I think you identified, to make a informed even decision about whether they want to purchase that property. And if they go and purchase it, knowing all of those things, then there's got to be some element of buyer beware involved. The second thing I think would be really useful is we need to get insurers away from the idea, and it's not all insurers, that they can just do premiums via postcode. And some insurers still do, and it leads to unfair results.
So individual assessment of properties, we heard that as well today as well. I guess the other thing was you mentioned that there are many things that need to be done. It's not one, silver bullet for this, but that governments need to probably stump up a bit more in terms of reducing insurance or making it more affordable, like the cyclone reinsurance, the $10 billion, guarantee that federal government put in. Is that something that should be expanded? We heard from a few people that should be expanded to cover other types of disasters like flooding and perhaps bushfires as well. Is that something you both think should be done?
Yeah, definitely.
Yeah, absolutely. And the other advantage of expanding it is you spread the risk. One of the important things about pooling and about insurance generally is assessment of risk and allowing that risk to be borne in such a way that those who can afford to bear the risk can, in a way that they're able to afford to.
And one of the proposals that has come up in a couple of submissions, they are by insurance companies, I might highlight that, to make insurance affordable is for stamp duty on general insurance premiums, which is imposed by states, to be abolished. We've heard different stories about some say it will make a big difference, others say this will be peanuts and will not make a dent in the insurance. So I've seen you smiling, Mr. Holmes. What's your position on that?
Look, my response to that would be I'd happily consider that when insurers give me a really detailed breakdown of what the insurance premium is made up of and identify which bits are stamp duty, which bits are risk, which bits are whatever else is in there. And then collectively we can actually make an informed decision about what would actually make a difference.
How do we do that? How do we make that more transparent? Is it governments intervening to make regulation?
Because we have made the argument to insurers that they should do that for reasons of transparency and for reasons of allowing people to make better decisions, both about whether the premium is right for them and about resilience measures. But as far as I know, none of them have done it so far. And if government intervenes and says you must break this up, then all of us actually know what it's made up of. Because if I'm being honest, at the moment, I'm not 100% sure on my $1,500 insurance premium exactly what that's made up of. And if we're wanting consumers to be better at making decisions, and we're wanting more transparency, and we're wanting to make good decisions about reducing costs, then I don't know what the problem is with setting that out.
Ms. Fitzey, I heard you nodding. Is that something you agree with?
Well, yeah, actually, to be honest, I do agree, because then otherwise, then how do you know if it is actually going to make a difference? Because it could be such a marginal amount that it doesn't actually make an impact anyway. So I do agree with that, yeah. If all of that is then, you know, put into the, you know, general understanding of what your premium actually, you know, is covering, then I think that makes sense then to include that, or to at least start to remove that. Yeah.
Okay, last question from me. The Climate Council, which is obviously one of Australia's leading climate organisation, estimates that across Australia, approximately 500,000 properties, or 1 in every 25, will be effectively uninsurable by 2030 because of the climate crisis. And 80% of that risk is due to riverine flooding. We know that in Queensland, 5 of the top 10 most at-risk federal electorates are in Queensland, at risk of climate change and you know, extreme weather events, and that includes Brisbane and Griffith as well. So, you know, it seems it's inevitable that insurers will desert big parts of the state, you know, because no one will be able to insure at the price that they offer. So I just want to go to the question of who should pay. And, you know, I put a question to a few people and got a varied response. So I'll give you the example of the US state of Vermont, for instance, which actually has passed laws very recently to make big emitters and, you know, oil companies to pay for some of the damage. Is that something that you think government should consider?
Look, my immediate reaction to that is part of what will solve this is everybody who's contributed to the problem addressing it in whatever way they can and whatever way is fair to them. And if we've identified that a particular organisation has been a primary cause of a particular disaster, just as an example, then in my view they should be paying some to assist society to get back on track from their behaviour. What's more difficult, I think, in that proposal is actually assessing how you would do that in a way that reflects any damage they caused and without, I guess the word is, imposing a premium on them just because of who they are. And often that evidence is difficult to find to hold somebody directly responsible for something like that.
I guess we do know fossil fuels are causing the climate
absolutely.
crisis, right? So fossil fuel corporations have a role to play there. Maybe last word to you, Ms. Fitzey.
Yeah, so I do agree with Mr. Holmes. Like, I think, you would want to at least make sure that they are somewhat responsible for it in, you know, whatever way, and that probably is really difficult to do. If anything, I think it might be best to actually try and spread out the costs across everyone, right? So that, you know, insurers, you know, everyone is kind of taking up the cost, whether you are in a climate, you know, disaster driven area or you're not, you know, kind of leveling it out so that everyone kind of ends up with somewhat of a equal kind of payment, so that not one group is maybe paying so much and others aren't, you know? Because at the end of the day, that only ends up impacting people who are poorer at the end of the day, because they will be forced to move there. I think at the end of the day, I do agree with Mr. Holmes, but I do think there's probably other measures that need to be taken. Yeah.
Thank you very much, both.
Thank you so much. Thank you
for being here and responding to our questions. Thanks very much.
Appreciate the opportunity. Thank you.
Okay, so he's running late.
Okay.
So we're going to have him and him together.
Okay.
So if you want to invite Melinda.
So, yes. So resilient Hirilpa is running late. So we're putting these and these together for now. Yep. Okay. Have a good weekend. Thank you. Yes. Thank you. Yes, see you next week. Okay. Could I please invite Mr. Mr. Ian Very, from North Queensland Action Strata Group, and also Miss Melinda Inter from Community Plus. Okay, so I think they want to go with them, so it's fine.
Oh.
Yep. Okay, great.
Oh, she's going to go with you.
Yeah.
Oh,
Okay, so they're still, yeah, that's all good. Good afternoon, Mr. Very. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, will you please state your full name and the capacity in which you appear today?
Okay, my name's Ian Robert Very, and I'm the contact for the North Queensland Strata Action Group.
Thank you, Mr. Very. And now I invite you to make a short statement.
Thank you very much. Thank you for the opportunity to speak to our submission. The North Queensland Strata Action Group represents strata owners in the Cyclone region of Queensland. Our submission responded to your terms of reference and focused on compulsory unaffordable strata insurance for buildings valued above 20 million. In this category, there are few insurers with the capacity to offer cover, and there is no competition. We explained the ramifications of compulsory unaffordable strata insurance, the negating effects on government initiatives, and we expressed concern for lost opportunity in the north. We applauded the introduction of the Cyclone Reassurance Pool, commented on its deficiencies, and queried why, despite its introduction, North Queensland compulsory strata premiums remain up to 12 times more. And we questioned why rates increased on the announcement of the Cyclone Pool and prior to its kick-off. We have sought evidence from insurers of claims that are attributed to climate risk and that justify why premiums are up to 12 times above parity, but none has been forthcoming. We prepared a risk assessment of buildings across Australia valued above 20 million. We determined risks are identical except for potential cyclone damage. Something is amiss. Buildings in the region have been constructed to cyclone code, and the resilience pool offsets cyclone risk. Since our submission, we have reviewed all available material and today reaffirm our position that industry restructure is overdue. The reason for North Queensland compulsory strata insurance premiums for buildings above 20 million being up to 12 times above parity is not attributed to climate risk, but rather is attributed to selective and uncompetitive pricing strategies, as well as insurer disinterest in utilising the cyclone reinsurance pool to offset their risk. Australia's resilience is in the hands of listed companies, answerable to shareholders, with performance measured by profit. Risk from climate events is real. The path to combat climate risk requires a mix of demands comprising leadership, hard decision-making, a collective approach, considered priorities, consumer confidence, focus, consistency, innovation, cooperation, transparency, trust, flexibility, and a lot of money to build reserves and to address mitigation. Profit as a performance measure may be at odds with these demands, but without any doubt, profit-based performance will erode the money. Market failure has occurred for compulsory North Queensland strata insurance for buildings valued above 20 million for reasons other than climate risk. Market failure has occurred because body corporates borrow to pay premiums. Maintenance is therefore deferred. Collective ramifications make for unaffordable living, deflated unit values, and stifle development. and also because vulnerable owners, like pensioners, are screwed. Other markets may also have experienced insurance failure. Consider why. 50,000 industry employees, probably more, plus hangers-on, plus overheads, plus perks, plus bonuses, plus corporate profit, plus inefficiencies, plus structural indulgence, plus duplication, all being fed by rising insurance premiums. Add to the mix years of low interest rates, large claims, depleted reserves, fraud, the cost of people opting out of insurance, stamp duty, GST, commissions, inflation, trade shortages, rising material costs, a growing population, more assets, greed, and poor claims management practices. The real reason for unaffordable insurance is clear and explains why compulsory North Queensland strata insurance for buildings valued above 20 million, with few insurers with the capacity to offer cover, is an easy target to be price gouged. Eroding trust has sabotaged our resilience and highlights the need for a new way of operating. We seek parity and an investment environment for the North that promotes sustained confidence. To borrow sayings from past notable Australians, Joe Bjelke-Petersen, you can measure growth and confidence by the number of cranes on the skyline. They are missing from the North, and it's because of unaffordable strata insurance. Gough Whitlam, it's time. Inquiry after inquiry into insurance industry, spanning more than 20 years. In 2011, Warren Entsch welcomed an inquiry into strata insurance. It's now 2024, and we're still at it. Each time we put off reform, more territory is surrendered, and the fix becomes more expensive. It's time for change and restructure. It's time for a new way of operating before it's too late. From an unknown source, soft on the people, hard on the issue. As a nation, we've survived many disasters, rebuilt, and forged strong relationships. The industry does have good people, but it's not about knocking the insurance industry. It's about the issue. The issue is a model that delivers affordable and effective resilience for all Australians. We do not have it. How we currently operate will not deliver it. We recommend you go hard. Thank you.
Thank you very much, Mr. Berry. And I did notice you've been here all day as well listening in, so we might have some questions for you about what others said too. If I could go to you, Senator McLaughlin, first.
Can you sort of give us indication to the extent to which it's restrained building strata complexes, the pricing of insurance? You know, is there somewhere we can go and say, you know?
What I can say is that strata insurance is compulsory, so we have to have it.
Yes.
And because of the value that we're talking about, significant size buildings, say 20 million and above, there's only 2 insurers, or 3 now, I think, that's got the capacity to provide that. So in that scenario, there's no competition. I'm not sure I answered your question.
When I was listening to your opening statement, and maybe I misunderstood, but one of your points was because of this pricing, high pricing of insurance, it's restrained housing growth in this form of
most
houses.
definitely.
And I was wondering whether there was any particular data suite we could access to show the restraints on growth.
The last high-rise building in Mackay was 2008, 2009. So that's an example. And I think that if you look at some of the Townsville and Cairns data, it's very similar, and similarly with Rockhampton. So there's been and to most of us, we believe strata is a way of helping housing and housing affordability. But because of the cost of high strata insurance or compulsory high strata, it causes the body corp fees to rise. So body corp fees can be, $500 a week, more than what rent is. So it stifles development.
Thank you, Chair.
Thank you, Mr. Horton. Senator Sheldon.
Good, thanks, Mr. Barry, for coming and joining us, and also for sitting in during the hearing as well. So, in your submission, you said you've had, and you've mentioned in your opening statement, you've had discussions with insurance industry representatives. You've been unable to justify affordable strata premiums. What justification do they give, or what would they provide when they in those conversations?
Okay, so we've had meetings with Insurance Council of Australia. We've tried to have meetings with Allianz, but unsuccessful. They don't talk about climate. They tend to talk about other things, like how well the buildings were built or not built, and to me, or to us, that's measurable. If you can look at each building and you can determine what sort of shape it's in or what it's not. They don't actually give a reason other than that.
Are they suggesting the building that's built in Mackay or Townsville or Cairns is of lower standard than somewhere else? Is that their implication? Or
Well,
is that
I think there's a general view that there's some high-rise buildings in some cases haven't been built well. I think
I live in Sydney, so I can guarantee that.
There's a degree of all of that, but as I said, to us that's measurable. You can determine which buildings are at risk for that. Our concern is that prior to the announcement of the cyclone reinsurance pool, or on its announcement, insurance increased, doubled. So on the announcement, now that it's back in, there's been a mix of results. Some have gone up, some have gone down, but there's no consistency. The only thing that's helped us get out of trouble is overseas Lloyd's of London have offered cover in some cases.
Back to your point about when you're asking that question about how they're coming to their assessments on premiums, do they give you for example, properties that you may well either have authority to ask specifically for, or properties that you're directly involved with? Do they give you a breakdown of what the insurance breakdown is and what they're costing?
No. And typically, because we're talking about a fair bit of money, most buildings, body corps do a business or a building risk assessment that give to them. They involve the James Cook University to give a risk assessment as well, so they pay for that. They abide by, Strata abides by all sorts of regulatory obligations to undertake tests and inspections, fire inspections, and that doesn't seem to come into the equation.
Because that's sort of like again that question about transparency of how the figures have come up to, particularly when increases have come, including when increases take place. So, back to your point about increases, have they itemised why the increases?
No, there's never an explanation. It's really take it or leave it, and typically it's priced so you don't take it. If you have a look at there's a table on our submission, which gives examples of quotes from 2015 to 2023. And of course, it started at 110 and it went to 900,000. And the 110 is still above where, say, Brisbane, the Gold Coast prices were in 2023. There's absolutely no, and to put it, the words of a broker, now that the reinsurance pool's there should be really no difference because it covers the cyclone risk.
One of the terms of reference for this committee is whether the pricing of risk from disasters should be better redistributed across the economy. And your submission goes to that point, calling for parity with southern properties. How do you think that the pricing should be redistributed? What's your take on that?
Well, in the sake of North Queensland strata, now that there's a cyclone reinsurance pool to cover cyclone risk, it should be parity, because the only difference between a North Queensland cyclone region building and a southern one is potential for cyclone risk. All other risks are the same. In fact, you could argue that southern properties have more risk for hail and flooding, which tends not to happen in the north because we don't have any on the rivers.
Thanks, Chair.
Yeah, thank you, Senator Sheldon. Mr. Berry, your submission talks about price gouging as well, and I've read a few things about that over the last some months. And in your submission, you state that the impact on cost of living resulting from high insurance premiums across multiple categories seems to have escaped scrutiny.
Yes.
Why do you think that is the case?
Well, why do we think that? When the Qantas inquiry was on and the Reserve Bank inquiry was on, they were quite rightly critical of some of that behaviour. That hasn't been evident to us in the news or anywhere else, and the way we currently operate is putting us all at risk.
So you think that the massive rise in premiums, and it has been staggering,
yes,
is part of it is because of price gouging?
Well, in our case, where insurance is compulsory, so we have no option, we must insure. It's up to 12 times more than what it is in Brisbane or the Gold Coast. And there is a cyclone reinsurance pool which offsets the cyclone risk. So why is it not at parity?
Yeah, absolutely. And so what can federal government do to bring some parity to that, to stop this price gouging? Like, is there more regulation needed, more accountability, transparency? What is it?
Well, I think past practice will predict the future practice. So tinkering around the edges is probably not going to solve it. There needs to be a total new way of operating. And other than that, we're just tinkering.
Give us a quick picture of what this total new way looks like to you.
Well, I wish I knew, but I could imagine it being a society-based organisation, or a mix of reinsurance pools for different specific areas like cyclones that seem to be okay. Regional societies, or governed by a national code.
So without a profit imperative.
Yes. Use the profit to build a reserve pool for when there's a disaster.
Just coming back to the cyclone reinsurance pool, there's a lot of insurance companies are not part of that pool. Am I right in saying that?
Well, we're not sure. We know that for buildings above 20 million, there has to be a certain insurance capacity, and there are a few with that capacity. So we're not commenting on the general housing insurance, because I think there has been an improvement in some of that from what we've seen. It's more at the higher insurance end where it appears as though there's less insurers, so therefore the competition's less. So I think it's about competition.
And I think you do say that something like the cyclone reinsurance pool could be expanded to include other types of disasters as well.
Well, I think so. I think we made a couple of comments about the cyclone reinsurance pool. I mean, it's restrictive in where it helps North Queensland. So I think there's other businesses, other types of buildings, other industries that could be embraced in the cyclone reinsurance pool, like marinas, for example. But we do also think that other disaster pools for the other floods
would be beneficial.
will be beneficial.
Yeah, absolutely. We've heard today a lot about, and you've mentioned it as well, the opaqueness of how premiums are made up, what components. And so how could governments help with that? Again, is this more regulation forcing these companies to be more accountable and open in what they do and how they do it?
Yeah, really, we think that we've got to look at a total assessment of the industry and determine a better way to go, or we'll be doing this in another 10 years, trying to find out how best we can do it. I think we think that it's now time to try and find a resilient way that all Australians are protected.
Just my last question, I want to go into this because there was a lot of discussion about people who rent in the previous session. How are rising strata insurance premiums in North Queensland affecting renters in particular, if you have a view on that?
Well, the rent return for an investor is less than 1%. So obviously, I think if you consider that body corp fees may be $500 odd dollars a week, then you know that the poor old renter is going to struggle. So I think we gave a comparison here for a pensioner, and it's the same for a renter, but the strata insurance is 35% of the pension. 35%, and if you add in other insurances like health fund and contents insurance and rates, then you're 104% of the pension. So that's the implication for the cost of living of strata insurance, because it's compulsory and because there's no competition.
But that must be having a terrible effect on people have to pay,
absolutely, and I mean the effects are widespread. But for an owner who owns the building, the value of it is less than 80% of the replacement value. So in other words, we've got this huge rising market where house prices are rising, yet apartments in the Cyclone region are falling. I mean, if you have a look on Domain or realestate.com, and you'll see that unit prices are quite deflated. So for an owner, it does that. If you're an investor and you've got those properties and you rent them, well, to get a return and to pay, you've got to put the rent up. But typically, how it affects renters is that because owners have got them on the market, the poor old renter doesn't have any assurity of how long that property is going to be there. Yeah. So there's ramifications all over the place. But the main one is it's not sustainable.
Well, thank you very much, Mr. Berry. I think you've made a very strong case for a new model, because this one's definitely breaking.
It's broken.
Yeah. Thank you very much for being here today. Could I welcome Mr. Sebastian van der Zeel from Resilient Kurilpa and Ms. Melinda Intev from Community Plus Queensland. Good afternoon.
Good afternoon. Are we your last today, or?
Now we've got one more witness after you.
We're trying to make it exciting. It's I can see it.
I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, will you please state your full name and the capacity in which you appear one by one?
Sure. Sebastian Van der Ziel. I am representing Resilient Kurilpa.
My name is Melinda McInturf and I'm representing Community Plus Queensland.
Thank you. And Ms. McInturf, if we could start with you and if I could invite you to make a short opening statement.
Thank you for the invitation for presenting today. Community Plus has been delivering significant place-based infrastructure across the inner south of Brisbane for 30 years. We operate neighbourhood centres across the inner Brisbane south. We create active centres for strong communities, identifying and responding to the local needs. Both Yeronga Community Centre and West End Community House provided critical response, support and partnership with the Queensland Government and in the immediate response phase following the flood of the rainfall event of 2022, setting up pop-up recovery hubs and continuing ongoing flood recovery support. We mobilise volunteers, receive donations for resources, and our Q-Stars provide tenancy support. Our community resilience team assists flooded community members to navigate and access information, support and services they need for their recovery. We provide case management to enable flooded community members to project manage their repairs and connect with other services. This funding has been life-changing for our community post the disaster. Our advocacy and support for our community across the Brisbane LGA has enabled flooded communities to receive assistance that they need for their recovery journey. Our team works at the grassroots level to build resilience in householders, neighbourhoods and the wider community. We work with residents, groups, leaders, businesses and all levels of government, building greater resilience in people, buildings and environments. Insurance is a topic that is raised in our community at every event and in every conversation. Insurance increasing is high across our region, which is the Brisbane Inner South. For many years, neighbourhood centres and community centres across Queensland have been at the forefront of disaster preparedness, response and recovery, particularly those centres that are in disaster-prone areas such as ours, working with the most vulnerable homeowners. We work with Tenants Queensland, who you heard from today, Legal Aid, Caxton Legal, financial counsellors and mental health support. We work with homeowners who know the risk that they own. Some do, some don't know exactly what that is, but some are willing to take the risk. We have heard over this last year that there are many embargoes on properties in our local area for insurance. Premiums via a postcode, including my own property that is in a flooded postcode but has never flooded. Homeowners having no insurance, facing mortgage issues. We have homeowners who have had over $20,000 to $35,000 insurance premiums. We have one person we are working with who is an ex-service person in the Navy, who his 3 children are now paying the insurance for his property because he is unable to afford. Community centres across the state work around influencing policy and shaping funding and learning and developing, fostering, strengthening place-based learning and development to support disaster-affected communities through the complexity and the compounding nature of disasters. Our centre is here today to give evidence that the climate change and the insurance premiums are affecting our community to a point where many of our homeowners cannot afford insurance.
Thank you very much, Ms. McIntyre. And Mr. Van der Ziel, if I could ask you to make an opening statement, please.
Thank you. Thank you so much for the opportunity to present today. We, as a Resilient Kurilpa, are a network of volunteers and volunteer organisations who've been built basically in the area of West End, South Brisbane and Highgate Hill. We as a group have responded to 2 core disasters which now affect inner city Brisbane: flooding and the ongoing discussion rising in heat waves. When it comes to flooding, In 2022, we flooded. 4,000 people affected, 19 out of 57 major buildings of residential flooded to the point of near inhabitability. So we formed as a basis of saying, well, what practical community-led solutions can we implement? And literally a couple of weeks in, people were like, insurance. We didn't intend to go to insurance. Our beginning was always to say, can we help people evacuate better? Can we build better social networks so people can adapt, can respond and prepare for disasters better? But what became very apparent that financial recovery was on everyone's mind. How do I, as a resident in an area that floods, get back on my feet? And as they tell us, these disasters are only going to have increase in severity and they're going to increase in frequency, especially for flooding. How do I continue to recover every time this happens? So as a community group, we're not insurance brokers. We aren't, I have a financial and economics background, but as a core, we aren't particularly adept at this area. So we did what normal community groups do, which is we start collecting stories. We start going, what happened? What happened when you went and looked at your insurance product? Did it actually cover flooding? Or did it cover a form of flooding that doesn't actually exist for you? For instance, only flooding that comes through the roof. Can't come from the river, can't come through your sewage, can't come over land. So even the beginning of the question of like, what are your resources? Did you know what you had? Do you know what insurance products? It just literally the concept and the elements of this journey just exploded. And I think that's where we are now as a group. 2 years on since that flood, we've built a knowledge base, but we're also starting to realise that in some sense, we are only seeing a very small part of an enormous transition that is occurring in the insurance market for disasters. And we don't know where that transition is going to finish, but we suspect it will not look like it used to. Whatever we knew about flood insurance, whatever we all knew from a sort of parochial basic understanding, it may not apply going forward. That things like mitigation, exclusions, premiums, the nature of the reinsurance market, I think that is really different. And what it's asking our community to do, the last thing I'll say, is that it is asking a group of people, body corporates, residents, everyone, to undertake a level of learning about the insurance market that is costly and difficult. And so we're also got this like pressure on people to actually get up the curve on something that is not naturally easy to understand. What is a 1% AEP event? What does sublimits mean on an insurance product? What does parametric insurance mean? So anyway, I think where we stand as a community-led volunteer organisation is we continue to ask the question, we don't know solutions, but we are just trying to collect information and build a knowledge base and communicate to all about what we're seeing.
Well, thank you both for the work that you do in the community, first of all. And if I could go to Senator Sheldon for questions first.
Good. Again, I'll echo the Chair's appreciation for you coming and joining us this afternoon. I just want to go through, you touched on the projects that you're involved with, and I'll go to both of you, to improve flood resilience and mitigation strategies. Could you just want to expand on some of those projects and the number of people involved and what the response rate is and the reach out and growth? Maybe Ms. McTurf.
Yeah. So we work with homeowners through doing the Resilient Home Fund, which is a federal and state-led initiative, $741 million to build resilience in people's properties, whether that's through buyback, retrofit, raise or knockdown rebuild. And so we have over 300 clients that we're working with in the Brisbane LGA. We work across the Brisbane region, helping people build the resilience of their properties. Many of those people think that if I build the resilience of my property, that will reduce my insurance premiums. We're actually finding that it has the opposite effect. Because if I'm putting a kitchen that's more resilient in my property, which costs $40,000 as opposed to a chipboard kitchen that I put in my property that is worth $10,000, my value of my property, the insurer knows, they're being informed that you're doing resilient because you're going, okay, I'm going to tell them my property is now resilient, so it's less risk for flooding, but they're looking at if it's higher for fire or other natural disasters or, unnatural disasters that happen in properties, the premiums are actually higher because of replacing of, it's not plasterboard, it's cement sheeting and things that are more expensive to do. And if, as well as people that are raising their homes, we think, well, they're out of the flood water, but then their property, if it burns down, it's more expensive to rebuild because it's higher and the conditions for council are requiring them to build differently if something happens to their property. So we help people as well build the resilience of themselves as an individual. We're part of Resilient Kurilpa as well, that is trying to understand that, people take risks of living in flood zones. Some others don't in our community. And so how are we building the resilience of the community, of those that can help, those who need help, and those who want to understand what their risk of flooding is and what they can do in the future to make them. We can't rely on government or agencies to come and rescue everyone as our population grows. We have to be more prepared as a community from the grassroots level, and that does not start. Grassroots is not at a council level, it's at street to street. What am I doing with my neighbour? Statistics and research this year has found that the most trusted source of information during a disaster is your neighbour. And so we are empowering neighbours to understand what that is and share their stories around that.
And all strength to what you're doing too.
Yeah.
So it's the same question. One of the areas that we identified very early on was that the Queensland government is very focused on detached housing. It's almost like a little bit stuck in the idea that flooding only affects houses that are standing on stilts in floodplains. Our area, the South Brisbane, West End, Highgate Hill area, has 57 multi-res buildings with hundreds of apartments in each of those, of which a number of them are in effectively the 1 to 5% AEP area, so they have a decent chance in insurance parlance. And we recognised day one that there was no template for flood mitigation for buildings, not available anywhere. So what we did was we went to the buildings that did the best. We said, we looked across actually you just look and see which one's got lights on. And you go and say, what did you do? And they say, well, in 2011, we flooded and we broke everything. And so when we spent from 2011 to 22 putting in mitigation, millions of dollars of mitigation, to make sure lifts don't go down into the basement during floods, to make sure electrical boxes were moved up, people move their cars out, because cars actually float and smash into walls. And they showed us that that a range of mitigation efforts could actually be developed. And they were at one building actually reduced its total flood damage on a similar scale by about 90%. So it was about $1.5 million, and it went down to just over $110,000. So we have coded up all of those mitigation efforts into a template, and we've set that template out now and run multiple sessions with body corporates across our area to say, could you start? Body corporates are volunteers. Yes, they own their apartments, but they're busy. So you can't hand them a big document and be like, go and fill it out. They sort of have to come back and be like, I've done this bit, I've done the fire exits, or I've done the electricals, or I've done the sort of info cards for each apartment, where they have an info card on the wall that says when the flood comes, that process. So we've had an uptake of probably about 10, I think, are really. 2 or 3 have already done it because they were doing it before. We've got a couple that are getting into it more materially, probably 10 that are on the way, and then there's probably another 30, 35, 40 that need actual, they are not, it's not, whatever the reasons are, the body corporate, whatever the structure is, their capacity, they aren't yet engaging on that, even though they are probably at risk from that perspective. So that's the numbers on our mitigation.
That's a very powerful figure you just gave us.
Yeah.
From was it close? So down to 110,000 from
just over $1 million.
Just over $1 million.
Yeah, and not only that because I'm not here to tell the story, but Leanne Sturgis, who's part of our network but who's away, she's the body corporate chair. Their ability to outline mitigation, they are actually denied insurance recently. They set about, this is prior to the most recent floods, they'd done all this mitigation, they had insurance, they had the best mitigation we've ever seen. They got cut off a couple of months before the flood, They raised a self-funded self-insurance levy for 100 grand just before the flood. They had the money on hand. They were able to mitigate their risks. Like, perfect story, right? But there's a lot of bits and pieces to that. And so Resilient Corupa is also helping body corporates think about, okay, if you can't get insurance, here are your options. By definition, almost every form of non-insurance is a form of self-insurance. You're either prepaying or you're raising the money after the fact, but you've got a form of like, I got to go get some money from somewhere. And so we are also working with body corps to say, where you can't get insurance, here is groups who've done it. Here's body corporates who've set up self-insurance. And so this group was able to really get on day one after the flood and be like, here's 100 grand to the builders, to the construction guys who all, they're driving around waiting to get the jobs going, and everyone's saying, well, I'll wait till the insurance pays out, or I'll check my insurance policy, and these guys have the money on hand. So they've continued in that process. They've re-raised the self-insurance fund. But we know from an economist perspective that a lack of insurance statistically leads to lower economic outcomes in the long term. Like, self-insurance funds are, by their nature, that's what the evidence says. But right now in our area, we have got self-insurance rising in quite a few different... And these buildings are worth hundreds of millions of dollars, and their risks are quite high. They can be 10, $1 million, $3 million, $5 million in terms of damage. A multi-res building will not get wiped away like a single detached. Like, you will not see a multi-res floating down the river as you might see with another building, but they do have quite a lot of electricals and quite a lot of things. So, yeah, we're on a journey with that.
So, I'm just wondering, with this takes quite a bit of first again, congratulations for the work that you're doing, and again, I hardly agree that there's a voluntary community response and how we do this together, and the levels of government should be partnering communities. Has there been much partnering from different levels of government in some of the projects? Has there been monies provided or resources in some tangible ways as well?
Yeah, so we did some seed funding for Resilient Corupa in a project that we did, that we got flexible funding through the DRFA, through the Disaster Recovery Fund arrangements. And that enabled us to kind of, with Resilient Corupa, as an organisation that Resilient Corupa is in our region, to go, okay, here's some small funding that we can start off with, getting the data together to be able to apply for more funding down the track, which we did. So we got funding in round one to start off some work with Resilient Corupa as well as other regions. And then we applied for a grant for Resilient Corupa as Community Plus, because we are able to do that because they're not incorporated and we are. And so we applied for the $100,000 through the flexible funding. But that runs out in December. Disaster recovery funding arrangements, there's been a Senate inquiry on that this year too. And so where that leaves us is, come December, the work that we do then fully falls back on community members to say, yes, I can take on that redevelopment of the website and things, that is empowering our communities to be more informed and their insurance, know their risk. So, with the plans, it even goes to the point of knowing, when the level of the flooding is at the rotunda cement on the river, what you have to do. And then the next piece is this, and the next piece is this, so that residents can be more informed about what I need to do. I don't need someone telling me that. And so we work on a community-led preparedness and resilience. But that, for organisations like us, we've been trying since 2011 to get funding to do this work. It only comes after you get a disaster again that it's like, oh gosh, we're in the middle of it again. Here have buckets of money now, and then we're starting to see that it starts to dry up again, and community organisations are left to try and find the resources to do that, because we find that it's so important for our community to be empowered and to be community-led in this response. We can't rely on everyone else telling us how to do this anymore, and Resilient Corupa is a perfect example of community-led action that a small amount of money makes a huge difference to be able to bring that information to the community to be more prepared for the future.
Yeah, and Community Plus has been so important for us to be able to secure a little bit of funding. And the goal of the funding really has been to fund the digital presence, which we've built an enormous digital presence in terms of stories and templates and the structure at resilientcarilpa.com. But also, and this has been a journey for us, is we fund young people in our network to do the work, because we are trying to build capacity in our sort of 20 and 30, below 30-year-olds in this area, because we see actually the longer-term focus is that we actually need skilled people to be able to navigate things like climate change, the changing nature of insurance markets, the digital space, which is how everyone communicates, and the nature of communication and community engagement. And so what we're actually dealing with here too is resources that we are building specifically so that they are young and capable for the long term.
In a sense, building community capital and community capacity.
Correct. Because this is the human project. I mean, as I said in my own statement, this is a transition. So for us to stand and say we've done enough today, the temperature's still going up, emissions are still in the atmosphere. We are still going to all the factors which we believe are driving the sort of tip of the spear of this area are continuing. So we can't really say a bunch of people over the age, and I don't mean to be ageist, over my age and above, you're the only people who get funded to do things. We actually have to fund young people because they're helping us build capacity in the long term. So.
Very good. Just a final question. Is that, I'm sure there's Senate colleagues are going to ask a number of questions as well, but one of the terms of reference for this committee is whether the pricing risk from disasters should be more redistributed across the economy. Just saying what your views are about the extent to which premiums should be socialised for anyone living in high-risk areas with costs spread across residents in lower-risk areas. Have you got a nuanced view of that, or
I do. Well, I think we have conflicting views, but
That's okay. So we're trying to. There's a lot of conflicting views about how we should approach this as a community.
I did natural resource economics at University of Queensland. I studied economics in New York. I have a long history of city-based economics. I don't have a firm view because there are conflicting questions about whether this represents a market failure, whether actually something is going wrong in the markets that's leading to mispricing, or whether this is actual real pricing for real risk, and this is the nature of it. And if it is the nature of it, then the solutions will not come from socialising those costs to other people, because in some sense there's no upper limit on what cost will have to be borne by the taxpayer or socialising if it's the fact that climate risk just keeps coming and coming and coming and coming, and the disasters keep happening and happening, and the damage keeps happening and happening. It doesn't necessarily suggest to me that it will stop. So to put it on next to the taxpayers is to say, here's a blank cheque we're going to need from you indefinitely. And we see that in a real, so that's one side, is that the market. We see that played out in real practice, because in our area, Carilpa, last year we had a new planning regime placed on us called the Temporary Land Use Planning Instrument. It basically maxed out the levels of stories of buildings you could build in our area. It went from 12 and 30 stories to 90, and they are in flood zones. So you're asking the question, are we going to socialise the insurance risk? But we're stacking people and new properties on floodplains. So in some sense, I'm the taxpayer being like, well, then don't build there. Like, if you're going to bill me for all the damage, don't build there. If it's a mispricing, if fundamentally insurance companies and others are getting this wrong, and i.e. they're gouging or they're on a process of saying then of course, like, we need to go in up the regulations, up the transparency, and say, okay, where insurance companies are right, we'll move them to the process. So it's not a complete answer, but I can't imagine we would want to socialise an unending level of risk without making major changes to both the mitigation efforts of the people who are in flood zones and potentially restricting what we do in flood zones going forward. Like, that seems sensible when we're facing this nature. So I guess that's where I sit.
Do you mind if I...
Yeah, sure. Maybe one more.
Right. I'll go to Ms. McIntosh, but just So the point you're raising of the data question, like the amount of data that's available to actually make an assessment, is to say there's conflicting observations of what's available there, but the capacity to actually make a more calculated decision based on the lack of data is that one of the? Do you think that's one of the challenges that we have? And transparency of costing models that are actually from...
Well, I reference the Townsville Lot Owner Groups and their fantastic work in trying to get everyone's premiums and everyone's policies and starting to compare them and actually saying, like, what is people actually experiencing. That's probably very valid. I mean, that's what we do in regulatory economics. We take everybody's stuff and we look at and we say, and whether we want to go heavy-handed like that into that kind of market, that's a question. But I mean, if we really do believe that, sunlight is the best disinfectant, like maybe the question of transparency is an important one to address in this market. But I find the macro idea of us just exposing ourselves to more and more risk being probably as important, if not more, than does such and such insurance company just push, try and juice the premiums in particular areas. Like, I guess I'm just struck by the two. Those two things.
There's a push and pull going on. Yeah. Briefly, Ms. Kintoff.
Yeah, I agree. Some people believe that they live in, they choose their properties based on their flood history. People that have been flooded before will decide, no, I'm out, I'm going to go and live somewhere else, and to price them into that mix then because they've made a decision to move out of the flood zone. I remember when we gave evidence at the Senate inquiry earlier on in the year, we're buying back homes through the Resilient Home Fund to buy back properties that are at risk of flooding, yet we're building on floodplain in exactly the same suburbs. I don't understand that. So we're putting houses, multiple stories, like Sebastian said, we're building, houses on the floodplain and then expecting that the result is going to be different next time. And so I'm conflicted by that too. We have people who just can't afford to live anywhere else. There's been over 70 houses in our community that have sold since the flooding of 2022. That's because people want to live close to the city and they're willing to take that 1% AEP, even 5% AEP, to live close to the city on the river. One of the people that we work with says 99% of the time I live on a river that is beautiful. 1% of the time she is a nasty beast and comes and gets me. I weigh that up of what my risk is worth, and that is worth that. But as I said before, we have people that, their families are paying their insurance because they're a pensioner who they just can't get insurance, but they've seen the damage that has happened. So they've insisted, we will help you pay for that insurance. So, it's a two-edged sword. Do we want to, as Seb said about having a blank check, do we all want to pay for that blank check when developers are building on the floodplain and they're reaping the rewards of that and placing that back on body corporates to then, fulfil that for the rest of time?
Back to you. Thank you for that. Thank you, Chair.
Thank you, Senator Sheldon. Senator McLaughlin?
No, I'm fine. Thank you.
Okay, great. Okay, so, obviously, and we've heard from so many people over the years, significant trauma and anxiety in the community because of the floods and the disasters. What have you heard from the community about the rising insurance premiums? Is that contributing to, or the lack of, unaffordability, unavailability, is that causing anxiety and trauma? And given at the same time, there's a massive cost of living crisis. What have you, just a few stories if you've heard for the record?
Yeah, we've seen it all. We've seen body corporates who don't know where the insurance policy is, so they don't feel bad at all. They don't know whether they're covered or not. They assume that the body corporate manager has something for them. They don't know. So to say that the spectrum is quite wide.
Yeah.
Like, it's not like there's a neutral. There's literally people who live in ignorance. So there's a lot of damage.
Yeah.
Then there are very proactive groups who are making really interesting and thoughtful decisions about their risk profile. They understand it very well. They've got engineers in there making great decisions. They're talking to insurance companies with real intelligence. But there's a lot of resources, and they're getting sent insurance policies that are saying, for instance, if you make a claim, it's $50,000 to put that claim in. Like, the cost jumps are extraordinary. And they're getting insurance policies where they're getting a coverage of $1 million and it's 200 grand a year, and it's 200 grand to put as an excess. So they're going 400 grand to get $1 million coverage. So, and then the other ones are getting sent parametric insurance, which is like, hey, if the river gets to X, we'll pay about 500 grand. And they look at the river and they're like, by the time I get river there, my property will be gone. So, but the parametric is not working. So there's enormous amounts of anxiety. I mean, I don't experience it, so I can't talk about it in this. I only reference a line I once heard. I had a friend who didn't have health insurance in America, and he says, I'm afraid to cross the road. I think about those people when it rains. I think about people when they say, we're going to spill water out of Wivenhoe. Like, that is real anxiety inducing. And when you have discussions about premiums with them, they're like, I don't even want to talk about it. It's so crazy that I'd rather live in ignorance.
Yeah. It's like this HEX debt.
Yeah.
That's what students tell me about the HEX debt. They want to see it because they know it's bad.
Yeah, that's right. And so we are on this journey where it just doesn't, the model doesn't, like, they're just paralyzed by, like, oh my God, that's not going to work. So, yeah, that's what we see.
Ms. McInturf, would you
we
like to
have
add
lots of
anything?
people who, see mental health clinicians that come to our community centre. We refer people to them all the time, and lots of that is around people going, well, I did have insurance in 2011, it didn't pay, so I didn't do it in 2022. I didn't pay all those years, and so now I'm at a point where I can't repair my home. We have people living in tents in the backyard of their houses because they can't afford to rebuild their homes because they made the decision not to have insurance. Yet we have other people who did have insurance that still is going through AFCA, 2 years down the track. So people are, just disillusioned by the insurance, that they see others that didn't have insurance that repair their homes and get back in, and they're like, well, what if I just would have put that money aside and done that myself? We have people that, talk to us all the time, especially after the storms that came through at Christmas time, that had no insurance, young people who cannot afford the insurance and so therefore have no insurance. This is, for us, it's about explaining to people that even, take the flood out of it if you can't afford the flood, but the insurance companies are, as they talked earlier, about itemising what it is. I don't know how much it's going to cost if I take flood out. I did that in my own home. I made a decision to not have flood insurance. My house is not at risk of flooding. But that causes me anxiety to go, I live near a creek. What if it does flood? What if we have this major flood that does come and inundate my home? I'm like taking a economic risk right now. But we talk to people who, had their homes damaged in Christmas that had no insurance. They had their roofs blow off and they're like, well, we weren't declared a disaster zone, so therefore then those disaster payments from the federal and the state are not issued to them, so they have to find money to repair their house. Or you have a fire and you're not insured for anything. It's a risk of your mortgage as well. Your mortgage says you must have insurance on it. Your mortgagee can actually purchase insurance and put it on your mortgage for you. But people don't understand that. It's a risk for people that they don't know what the rules are when you get a mortgage. First, they ask for your insurance policy, but then they never, hardly any of them are starting. But we are starting to have people who are asked by their insurance company, people that are in a flood zone, do you have insurance?
We were talking about renters earlier as well. They're in a specific predicament. And I gave the example we heard yesterday in Ballina, where a renter, after the property they were renting was damaged, had to move out and had to move then 16 times during 1 year. I mean, it's even hard to imagine what that looks like. So what do you think could be better done about that?
we run tenancy advice service under Tenants Queensland that gave evidence here before. And we find that renters, are not even informed. We live, our area is right near the University of Queensland, across the river from there. Lots of renters, international students who have absolutely no idea about what their risk is coming in.
There's no obligation.
There's no obligation not to buy or rent. There's not even no information from the real estate or the homeowner to say you are at risk of flooding. And so renters are at the whim of the landlord. Then if they do not have insurance, then I can go and find somewhere to live for 10 to 12 weeks while the property is repaired. But if the homeowner doesn't have insurance, then they're scraping money to try and repair the home. And, not all people who rent homes, the landlords are rich.
There's nothing available to rent anyway.
That's right. And we find that in our area now with resilient homes, where repairing properties and people have to move out for a period of time. And there is nowhere to rent, so we're putting caravans in the back of people's yards so that they can, live. So renters are at a real risk because no one's telling them, unless you are savvy at knowing what the flood risk is, and at the whim of the landlord to say, no, I'm going to wait until the insurance company fix. They get rent coming in from landlord's insurance, and they just wait. And a property lays vacant. We have many properties in our community that are still laying vacant by investors that haven't repaired.
And the thing I would add to it is we often struggle, I think, as a community to also imagine multi-res and major buildings, and that's been the journey I've been on in many ways, being educated by people who live in multi-res. What uninhabitable means in multi-res is very different from what a singular house. A singular house will have, water damage, waterlogs, electrical. The living areas of a multi-res may never be impacted. They could be 8 stories high, but the lifts are broken. We had buildings that were months with no power. Kids walking up and down those buildings in the fire escapes with torches going to and from their houses because they did have anywhere else to live. And they were still arguing about whether they had insurance or not. They were in insurance claim processes. So renters in multi-res often will say, well, actually, my bed's fine. I can still go to somewhere where there's a lock and a key, but I don't have power. I don't have a basement. If I'm elderly or disabled, I can't go up and down the lift, which is actually super important for my access. So people being carried. In fact, people talked about it being up there for 3 to 4, 5 weeks in the same apartment waiting for the process. So the deployment of insurance or the deployment of financial recovery tools, whatever they be, government, insurance, self-funding, whatever, the impacts on renters and all residents are very similar from that perspective, which is in multi-res, certain infrastructure is the nature of its ability to be inhabited. And that still, I think, hasn't sunk in very well in a sort of broader policy perspective, which is you could still sleep in a bed, but you might wait 5 to 8 weeks where the power doesn't work and the lifts don't work and stuff like that. And those repairs are not patch repairs that can be done by a community member. They have to be certified by a qualified electrician and Energex, and Otis has to come for the lift. Like these guys are, you don't want someone half-assing. It's not maybe not like the Ballina repair house where you can drag down a washing machine and say, can you repair it? These things are really expensive and really hard to repair.
If I could ask you, Mr. Van der Zeel, we know that, with the climate crisis kind of ramping up, these climate-driven disasters are going to increase in intensity and frequency. And I mean, for the people on the ground, this has come to, obviously the massive damage to their lives, properties, people have died, but also the insurance issue of not being able to have insurance or not being able to afford it. But for insurance companies, and I gave the example to Suncorp of their own profits, they are making massive profits out of this. So, and earlier, I think you may have been here when Mr. Very's proposition was that the model is completely broken and something new has to be put in place without a profit imperative. I'm just wondering what both of your view, if you have a view on that, is that do we need something new that works?
I have a mixed view on this. I don't fundamentally. I mean, corporations have both a responsibility to maintain their long-term sort of sustainability. The insurance market is complex, and even my understanding of it, I did a bit of work in the US on it. A lot of their returns can be associated with the stock market, what they invest in, what they invest their corpus in, and so I don't immediately drive towards the insurance profits are a direct kind of structural question, because I look at the rising nature of the risk and say that looks way bigger than, like, if they're handing out disaster insurance and they're not paying it, fine. Like that, if they're not meeting the conditions of the insurance they're supposed to be covering, that's not legal.
But they are, in many cases, not meeting them. We've heard all across northern New South Wales.
Your view is that should be shaved as a result. And if that happens and their profits go down a lot, then I think you've been proven quite right. The other implication is that a bunch of them are handing out insurance products in a range of ways, and some of them might be quite risky. They just haven't been triggered yet. It might be motor vehicle insurance or housing insurance, and they're enjoying a sunny day. And what might happen in 6 to 12 months is that they might get absolutely smashed because of something. So, again, the insurance market has risen because people demanded, in my view, an alternative to saving their own money in their bank account or relying on government handouts. The insurance market, I still am of the opinion the insurance market has the potential to operate well, and in times it does operate well. Is it operating well here because of the behaviour of insurance companies? I think there's evidence that should be looked at in more detail. But I simply also go, like, if we keep saying things are only going to get worse, then insurance companies are going to behave with very self-preserving behaviours, because they're saying we need to make sure we survive, i.e. if we get smashed by a disaster, we need to... So I don't want to... I'm not absolving them, but what I really feel is like looking at annual profits and saying, aha, there's clearly something really bad happening. I reserve the right not to say that that's like completely factual until we prove it, which maybe you have and maybe I just haven't read it. But I am more worried that in 2 to 3 years, we'll look back at the insurance that's available now and say, well, that was way good, and it got way worse, and insurance companies were way harder to get involved, and they were totally gone, and all was left was me and my bank account trying to save money so when it floods next, I can pay for it, or waiting for government handouts, and that's it. So I don't see how we function going forward if insurance companies aren't part of it in some way, I guess. I don't. Yeah, that's my experience.
Would you like to add something?
Yeah, I worked in 2011 in disaster, in the flooding, and it was very ambiguous insurance, more so than it was in 2022. Most people knew in 2022 whether they had insurance or they didn't have insurance. The insurance companies were very clear to most that had asked the question around that. So I don't think that the profits do, I don't have an opinion on that because I don't, I'm not an economist and know that. But I know that what we had in 2011 was a lot worse than we had in 2022. People knew. And so moving forward, we have to know that the model is getting better, not going back to where people are, am I covered or am I not? Most of the people that we work with, had no insurance at all. And so they were like, well, I know I'm not covered, so therefore I'll just do,
Yeah, perhaps if you had better transparency on what part of the premium is going to, could make a better assessment on, what's going on. My last question is, we've talked quite a bit in this inquiry about adaptation, mitigation, becoming more resilient, but it is often on the individual community members that falls the burden of that. And these are people who are already bearing the brunt of the climate crisis and the climate-driven disasters. And I will say this, kind of very bluntly, coal and gas corporations, fossil fuel companies who are part of creating this damage are getting away scot-free. They are making record profits. That's on record, and paying minimal tax. We know that that's on record as well. I mean, I don't think that's fair. And when we talk about socializing the costs, how about we get these polluters to pay more of the cost of the damage that they are causing? Is that something that you have thought about or you have a view on?
Yeah, absolutely. I've had some interactions with the climate movement. I was a delegate at the Copenhagen conference in 2009. I think we have established without doubt that oil and gas companies have contributed substantially, and that when given the opportunity to make best efforts, they recognise that the climate crisis and their business model are not compatible. The question will be, like anything, are we in a position to levy levy something that says you are responsible for a certain level of mitigation, adaptation, compensation? That is not uncommon. And I don't see how long term, given they can say we always wanted that because we wanted to drive our cars and we wanted to, we needed fossil fuels at that time. But I think we're past the point where we probably understood that their contribution is becoming quite clear on this. Now, whether that looks like tobacco and those questions, whether it looks like all those elements, I don't know, but they can't not be part of this discussion because the socialisation of the cost, and not only that, in some ways, I mean, in reality, what we see in our community is that most of the cost of this is borne by the community member. Government actually doesn't cover much of this. So, in some sense, we are dealing with an extraordinary level of cost, both from a psychological perspective, from a financial perspective, from a whole range of perspectives on individual members of our community. And there really is very little that is offered in terms of compensation or restitution or support. The payments from the government, I mean, if it's $1,000, I'd be surprised, right? Like, it's a couple of $1,000 at the minimum. Like, I don't know if we've seen I'm not sure what inflation's been doing lately, but I imagine $1,000 doesn't get you very far, down at Woolworths. So the implication for this is that, yes, fossil fuels, the burning of fossil fuels, and the decision by governments to support fossil fuels going forward, I use that advisedly because this has always been, we need to ask the question, we're starting to pay. And so what do we do with that?
Thank you. And Ms. McIntyre, if you have a view, I'd love to hear that.
We see a lot of organisations, fossil fuel companies, mining companies that come to the table during disasters with some funding, minimal funding to appease, probably isn't the right word, but come going, oh, well, we can contribute to some of the solution around that. But the money that they give is very small to it, and it's, they want lots of things in return for that. So we don't work with many that are like that. We as a social justice organisation that has a climate statement does not, we are choosy who we partner with and who we don't. And so some of them do come to smaller organisations and offer money that is attractive during that time, but it comes with cost. And so I think in the future we have to look at the cost of the implications of mining and fossil fuels that we're using, who's profiting it out of that, and who's the end user that's paying more insurance or not having insurance or having their house flooded or the fires ravaging their homes. So,
well, thank you very much both for being here and giving us evidence. I'm not sure if Professor King is here yet. Not here, okay. So we will break for 10 minutes and then come back. Thank you very much both.
Thank you very much.
Been ringing him and ringing him.
Oh, okay. This
Well,
concludes.
It would be helpful.
I will do that then. So that concludes the committee's hearing for today. I sincerely thank all witnesses who have given evidence to the committee today. Where witnesses have taken questions on notice, the committee requests that information be provided within 2 weeks by 23rd August 2024. However, please liaise with the Secretariat if additional time is required. Thank you also to Hansard and Broadcasting. Thank you to our committee secretariat, Dr. Jane Thompson and Ms. Annika Khwaja, and thank you to my colleagues. Adjourned.